So what I'm looking at here, this last consolidation that we had here, 8:16 my time, Pacific Standard. This was a resistance spot. First time, we're just a little shy of that this time. Again, we're now back over the 20 SMA on a 2-minute time frame. But again, these 2-minute time frames, 5-minute time frames, 1-minute time frames, they're really not going to hold a lot of context, especially like on a day like today, where it's very volatile, it's news or speakers, this, that, and the other. They don't tend to hold up as well, these levels. But and what I really don't like to do is I hate sitting through trades, right? I hate sitting through chop. I think that's one thing that kind of gets everyone as a trader, is kind of sitting through chop and waiting for these moves to go. Because I've taken so many trades, I know that when they work, they just work, and it's very quickly. Like, even when I look at my dashboard, especially since as of late, since I've been doing these 5-point scalps, my average hold time is like 40 seconds to a minute, right? So if it's been 3 minutes, 4 minutes, 5 minutes, God forbid 10 minutes, and I'm still in this trade, then it's obviously not working in my favor. And the longer I'm holding this trade not working, or just kind of flirting with that take profit, the bigger the chances that this thing's going to whip back. And when it does whip back, it's going to be working against you. So again, that's why intuition as a trader is going to be so key, right? And you get that intuition with experience. But the more experience that you do have, the more you kind of, you're okay with stopping out when potentially that trade could still work later, or taking profits off the table early because you just don't like the way it feels. And as a trader, feel is everything. If you don't like the way something feels, you can't just sit in it for the sake of wanting to sit in the trade. I don't have support until 206.93, which is technically 10 points down, right? So if we're talking about a trade technically 10 points down before support, think about if you're playing one mini contract, you're going to be down around $200 just to even see this trade play out. Now, some of you guys, and sometimes myself, maybe we're not even okay with being in drawdown 200 points or $200. If you're not, then you should either be playing a little bit smaller contract size or just not take the trade, right? So that's why analyzing the risk first is always going to be key, just due to the fact that, for example, the reason why candle is sitting at 13 points. So all in all, even to see this trade play out, right? It's like going to Las Vegas or going to any casino, and they say, the at the roulette table, it's a $25 minimum before they spin the wheel. Well, if you don't have $25 to put down as the table minimum, you can't even bet or place the trade, right? Place the bet. It's the same thing as follows. So if you can't place the bet, you can't see the potential outcome. But if you're going to put your money up to see the potential trade, aka, if you're gambling, see the bet play out, then you shouldn't be taking the trade. So we kind of came down right now. We've tagged this 20 SMA on a 2-minute time frame. It's kind of trying to hold here. Again, the low of that reason why candle is 206.89. If this trade does not work and it drops below 206.89, obviously I'm going to get out of this trade. We do have this lower VWAP band that's kind of sitting down here. We have been creating a new floor. We have not made a new low in almost 30 minutes now. But it's not to say that later on this doesn't make a new low. So just be very cautious here. No one wants to sit in a trade and potentially give it 25 points worth of drawdown just to see it play out. We'd rather see this thing work out now, and or make the decision to just get the hell out of the trade because it's not working. So we're having a little bit of a 3-bar pullback here. We need to see this level stand. We need to see this 20 SMA start to curl and really act as support. If it starts to wick down below this 20 SMA, but it's still above our reason why candle, then yeah, but we need to see an aggressive wick. Now, if this starts to break down below it, for me, this trade's going to be off the table. 703, 207.06. That's kind of been the theme. It was a theme earlier in the day. And we have had a lot of these 20 SMA 2-minute plays work out. But earlier in the day, it was kind of doing the same. Big range, confirmation, going down just a couple of points, reversing. Going back to earlier in the day. Especially the first trade of the day did it. The second trade of the day did it. The third trade worked. The fourth trade worked. The fifth trade worked. Sixth trade wicked you in. Kind of went down quickly and then came right back up. Sixth trade did the same thing where it's kind of wicking you in off of a big range, 16-point range, and then comes all the way back against you. So, you know, when you're seeing that as a trader, when you're sitting in price action and you're getting your setups right based on the strategy that you're trading, and you're seeing things confirm, but it's just kind of wicking you in and then coming back against you, you've got to really take a step back and look at the market for what it is. Is that the best and most ideal price action? No, because every single one of you guys who have been in this room, period, have taken trades where when you get into them, they work. And when they work extremely quickly and it's stress-free. And you win another trade. And sometimes you win 3 trades in a row. And it's very easy to kind of call it quits. When you have this feeling, right? And I had this feeling yesterday in the morning early. I have this feeling again today. But when the trades are just not really working quickly, there's got to be a hard decision that needs to be made as a trader, and put ego aside and put the urge for wanting to trade aside and tell yourself that whatever happens, I have to live with the outcome. And 2, I need to be okay with being able to stop on the day, right? I can't keep pushing it, because the more you push it, the more mentally exhausted you're going to get. The higher probability and higher risk and higher chances are that you're going to get stopped out of a big trade, give everything back, and or, you know, go into drawdown. Like, for example, I've been in this trade now for 2, 4, 6, 8, almost 10 minutes, and it's back to flat again. So if this doesn't go on this candle, which has got a little momentum off this push of the 20 SMA, I've got to make the decision as a trader to just get the hell out, right? Get the hell out with maybe $100 loss or $150 loss or something, because God forbid this thing comes all the way back down very aggressively and goes down 15, 20 points. I don't want to be down $200, $300, $400 on a day like today where it's not the best price action. And especially trading a funded account, that's all it needs to do is just sit and wait. I just need more trading days to get me to the next pay period, because you need those 10 days in between, so forth and so forth. And that's it. So hopefully we get this little push up here. This current one mini contract's up $50, $60. It's just kind of bouncing around. Right now is also the opportunity, as it pulls back, is also the opportunity where you can say, I'll just take what this market is giving me, just get out, and I'll just wait for another setup altogether. You know what I'm saying? You can make those decisions too. It doesn't mean that it has to hit your price target. It doesn't mean that it has to pay you. You can make that decision to get out as well. We went up from being up $70 to now back to flat again. So you see what I'm saying? When the longer it spends not working for you, for me, I've always felt that the trade's working against me. So again, now we're down $100. So with that being said, there's no reason to kind of, you know, throw everything away trying to hope that one particular trade works. Because the psychology has to be there that when you do take trades and they are the best looking trades, they just go, right? They just go. We don't have to do this. Like, we don't work for the market. The market works for us at the end of the day. And if the market's not working for us, then it gets fired, right? It is what it is. Meaning, if the trade's not working for us, it gets fired. So what I want to see here is I want to see this candle close. I want to see this next candle open up, and I want that price target to get hit. If it doesn't, now I've got to step in, and I've got to make a decision. I've got to make a hard decision here. And in my decision, I'm just going to close that trade. So up $40, $45, I think it closed out at. It might hit the full 5 points right now. But I just don't like it. I just don't like it. So I'm going to take that $45. We're going to bring the day's P&L on that funded account to $145.70. Again, on this account today, this thing ever wants to fucking load. I'm trying to look at the stats here. I don't think I took that many trades. I think I took 2 trades, to be honest. Come on. When it loads, I'll let you guys know what the average hold time was. How many trades it took. I think it was 2. Could have been 3. I'm not sure. Whenever this wants to come up, I'll let you guys know. So right now from entry, that entry price should have been over 207.03. That was your confirmation. When price breaks 207.03, you should have been in. We sat through about 6 minutes of drawdown, right? And most I was down on one mini contract was around $100. I think I seen it touch 90, somewhere in there. Bounced off this 20 SMA and is now pushed back up, and I cut the trade for half the TP, which is nothing. It's nothing. I mean, I'm scraping and crawling and you know, fighting for 2-3 points. That's crazy, right? That's crazy. So 207.03, and the highest we touched was 207.09. Even if you didn't catch that top wick, if you didn't have like an automated take profit, then we're talking about 207.03 to maybe 207.07. So it technically, like when you look back in hindsight, technically this trade worked 100%. But I want to give you guys the harsh reality of trading. Even though if I go back at the end of the day when these candlesticks stop moving and the market is closed and I look at this particular trade, I'm going to look at this trade and it's going to look to me as should have just got in, held it, and it just hit your cool 5 points, right? However, when you're in the trade and it's chopping around and it's coming back down against you, and now look at it's going the opposite way altogether. When it's doing that, it doesn't feel as easy, right? So how can, as a trader, how can we kind of mitigate that feeling? Well, the easiest way for me, which I've always done and I was always taught, is size down. Okay, so let me give you a scenario. If you were in, again, don't look at the potential outcome of profits, just look at the potential outcome as a whole. If you were in on this trade with 1 micro contract, okay, the most amount of drawdown that we were in at any one particular time was the high of 3s to the lows of 91s. The most at one time that we were in drawdown was around 10 to 11 points, give or take. Okay, if you were trading 1 micro contract and you're down, let's call it $20, would you be stressed? Would you be panicked? Would you be freaking out that you're going to potentially lose an account? I don't think so, right? If you're in 1 mini contract and this thing's going down 10 points, it's going down 5 points, you're down 100, you're down 150, you're down 200. Are you a little bit more concerned? Are you a little bit more worried? Absolutely, right? Absolutely, especially if you're green on the day and especially if you're green by a slim margin, okay? So how do you navigate those feelings of emotions? It's by sizing down, okay? And again, yeah, sure, maybe on the flip side, when you win a trade and you're sized down into a couple of micro contracts, maybe you're only taking, you know, $20 here and $30 here and $40 here, depending on how many contracts you're trading. Sure, it's not a lot of money, but what you're doing is building habits as a trader to see your trade play out. You're building habits as a trader to allow yourself, okay, to allow yourself to be able to trust a particular strategy, to allow yourself to trust particular processes or whatever, right? So again, not every day is going to be the same. Some days we get into trades and they just hit right away. Some days it's like this. Yesterday morning, again, as I already stated, it was like this. And it makes things difficult, right? But this is what you signed up for as a trader. You signed up for this. It's now, if every day was beautiful and every day we were able to take trades and everything just won and everything hit because we have a strategy and oh, we've got risk management in place. If it was that easy, I don't think any of us would be sitting here now. We would all be out doing something that we love to do in a vacation spot that we always wanted to be at, doing things that the rest of the average person can't do because we've got the answer. You're never going to have the answer. That's why you have good traders, you have decent traders, you have horrible traders. At the end of the day, psychology and emotions really come into play, and everyone's emotional attachment to money is different. So there's those different feelings of emotions when you're in trades. Some people feel very hard pressed to get a particular payout or to make a specific dollar amount or to see a specific number on the screen happen, and if it doesn't, they don't know how to handle that. Okay, so every day is not going to be the same, and every day's not going to be the same. Some days you're going to have to battle back. Some days you're going to have to call it quits. Some days you're going to have to manually intervene. Okay, manually intervene. When you don't like something, and that doesn't mean that you're a bad trader, and it doesn't mean that you're not doing what you should. Like, if you manually intervene, like let's say for example on this particular strategy I have a 5-point take profit. I didn't like the fucking trade. Okay, I just didn't like the way the price action was moving. I didn't like how slow it was. I know that when my trades win, it doesn't take that long. I didn't like it. I cut it, $45 winner. So what, right? So in that particular situation, did I do a bad thing or a wrong thing? Because you're always going to have these people, right? You're always going to have these people, or you're always going to have these know-it-alls that are like, well, if you have a strategy and it hits, or you have a specific level for take profit and a specific stop loss, why didn't you just let it play out? Because I didn't like it, right? I didn't like it. It's the same way you get these traders, and I've seen them come all over social media over the years. They love a position short. Market can't go higher. They start shorting. Market goes a little bit higher. They short some more. Market goes a little bit higher. They short some more. Next thing you know, they've been squeezed out of their position, auto liquidated, lost everything because they had a personal bias. At the end of the day, this is a very intuitional game, and it's a very emotional game. Yes, we have technical analysis. Yes, we have strategies, and yes, we have edges to give us a slight advantage in the market. But if you can't control that slight advantage in the market because emotionally you just can't execute, or emotionally you can't let something go, you're going to get absolutely destroyed. Because for every trade that doesn't work out very quickly, guess what? This long position I just set up worked out very quickly. 2 minutes versus this one, 2, 4, 6, 8, 10 minutes, 12 minutes, right? I didn't like that feeling. I didn't like that feeling. But how about this long trade, right? It's like, this is the thing. This is the thing. As a trader, once you understand this, you will be in this game forever. You will be in this game for as long as you choose to be in this game, okay? For every trade that takes 10 to 12 minutes to maybe work, because again, we never know if the trade's going to work. You're going to have a trade like this, 9:04 a.m. Pacific Standard Time. Reason why was 12.5 points. So it was a smaller range by a fraction of the initial trade that I was in. So meaning what? Lower risk. And I didn't have to sit in it for 10, 12 minutes before it confirmed to potentially get my 5 points. It went now. It went now. Right? No, I do not show my trades. It does you no good. Learn how to trade. Again, for those of you guys on YouTube who call for me to show trades, it does you no good. Figure it out. Because for every trade that I click the button on over here while I'm talking, while I'm exiting, and you're wondering where I'm in and where I'm at because you want to see the trade to give you some kind of confluence, it's taking you 2-3 steps backwards. You don't have to be here either. You don't have to be here. If you're here to follow someone trade, you're not a trader. Go follow someone else. No one's asking you to be here. I'm not begging anyone to sit here and watch this stream. I'm here because I'm going on price actions. Why don't you just show your executions in live trade? Why don't you just figure out how to trade and stop watching streamers trade? Makes no sense to me. Right? I need to prove anything to anybody. I don't need to show anyone shit. My live stream is useless, yet you sit here and watch me. It's 100,000%. You know, it's like, that's the thing. It's like it makes absolutely no sense. It's absolutely no sense. You know, I can watch a plumber unclog a drain. It doesn't mean I know how to fucking unclog the drain. If I don't have the tools, right? If I don't have a snake to unclog the toilet, how the hell am I going to do it? Right? So, again, for the sake of everyone who really wants to learn how to do this on your own, and wants to know how to trade, the point is that, guys, and I've said it before in many live streams before, and I've said it before in many videos. You know, I've got like 2,000, 3,000 videos. I started this YouTube for one reason 4 or 5 years ago, and that was to document my own backtesting, my strategies, so I could go back and look at them. I still will go back if I have an idea in my head, or I have some type of analysis in my head, or I seen something in the market maybe that I did wrong, or maybe even that I did that I normally don't do. At the end of the day, I will make a video. And I used to do this a lot more when I was highlighting options and stocks. But I will make a video going over that price action, so mentally it gets ingrained in my head. And then it just obviously kind of evolved to sharing how I trade and indicators or whatever. But at the end of the day, the traders, like who was around, right? Who was around during like the pandemic trading, right? That whole craze, right? If you were around back then on social media, you could look around on, you know, on Twitter, you could look around on Reddit, you could look around on StockTwits, everywhere, every social media platform, and people were giving out, you know, signals, right? That was the big thing, signals, you know, NQ 20708 long, you know, price target 20721. That does you nothing. It does you nothing. Sure, can you sit there and you know, take that level and make money on those particular trades? Of course, 1,000%. But what's the lifespan of being able to trade like that? What happens if that person tips over tomorrow? What happens if that person doesn't log in tomorrow? What happens if that person doesn't make a post tomorrow? Are you going to be able to understand the levels that they were trading and why they were trading them and why they had those specific take profits? Or do you think the more you know, viable thing to do is to learn price action in some manner or fashion. Again, everyone has a different way of looking at the markets. Everyone has a different way of you know, kind of understanding and reading the markets. And there's no right or wrong way to kind of do that. But at the end of the day, if you don't know how to find your own levels and have your own instincts, you're not a trader. It's easy to learn strategy. It's easy to learn price action. But if you don't know how to actually put all of that in motion and execute, you're doing yourself no good. I do look at the higher time frames a lot. So my higher time frame that I'm going to be looking at is going to be the 1 hour chart. So for example, right? For example, if I look at the chart that I have on my other monitor here that you guys can't see, but I'll make this chart look like it. So I will look at this big chart with all of these supply and demand zones. I will look at the 1 hour view and I'll kind of see where we're trading at. Okay. So what I'm going to be looking at here on this 1 hour chart is I see the low of day here sitting at this 206.70. I see we've got a rising Bollinger Band here. We've got a top Bollinger Band that's kind of compressing together here. So it could be signifying to me that maybe the market is getting ready for either the next move higher or lower. Again, very cliche. The market's going to go up, market's going to go down, right? But it's signifying that there's potential change in price. Now, what I'm also looking at here on the 1 hour time frame is so far we've got a lot of buyers that are stepping in down here between 206.70 and around, you know, let's call it 206.90s, right? We noticed the wick the first hour of the day, we noticed the wick the second hour, and noticed the wick the third hour. So notice how buyers are stepping in off these levels. Now, below this level, if we were to lose low of day, I'm willing to bet that we come down to 206.60, 206.50. I would be willing to bet that we could catch a few points, 5 points, 10 points, 15 points to the downside on this move if that happens. I'm also looking at this chart on the 1 hour time frame as being pinched, okay? So we're trapped. We're trapped between supply and demand, right? Because that's all this is, right? It's an open marketplace between buyers and sellers. Where are the buyers? Where are the sellers? We need to identify where those buyers and sellers are at, and we need to try to be with the bigger population, right? I don't want to be the guy coming in the back door by myself. I want to be the guy coming to the party with 20 other people who all brought food and drinks, right? I don't want to be the guy that shows up empty-handed. So I want to come with the rest of the party. However, there's a lot of people sitting here between the 5, 10, and 20-day moving average that are holding this price action down, okay? So until this market gets over 207.25, it's going to be a little bit slow. It's going to be a little bit choppy. Now, once we start to take out a previous hour candles high, then that could give us room for expansion. But you can see we still need to get through, right? We still need to get through this overhead supply, okay? So I'm looking at 3 levels here of supply. You know, supply is just another fancy word for resistance. That's all it is. So we've got resistance here, we've got sellers here, here, and here. We need to clear these guys out before we can now join the party and potentially push these highs that we were trading at in the overnight session and trading at in the beginning of the day. So yeah, so as of right now, if we go down to the smaller time frame, because we are holding these levels, right? Because we're holding these levels, I'm going to give a little bit of benefit of the doubt to the longs, okay? However, It's just a benefit of the doubt. It doesn't mean that this trade has to work out and we have to get over all the supply and start breaking up towards, 207.90s, right? 207.800s, right? It doesn't mean we have to start pushing highs. But let's say, for example, you do find a setup and it does fail and it does come back down, and let's say we make a new low. Can you really be upset? The answer would be no, because you already knew that on the higher time frames you were buying into supply. I don't want to buy, right? And then no trader should buy into supply. We want to buy when we have space. We want to buy when we have room. We do not want to buy where we're going to potentially get, or potentially there's sellers, right? We don't want to buy when potentially people are selling. We want to buy when people are buying. So typically, that goes to the notion of, you buy in a strong market, which we're in a strong market, you buy the pullbacks, right? You buy the pullbacks. You don't buy it as we're approaching all the supply. Now, if we were to pull back once more and put in a new higher low, then maybe you can give that cheap long an opportunity to go, to the upside, and then use like a prior swing as a swing low as a stop loss, and then ride it back up to the upside. We're really not going to let the air out of this hot air balloon until we get over this 200-day moving average. Right? Volume's also drying out too because we're in lunch. So this hour here is definitely not the most ideal to trade. That's in my opinion. But again, I will look for a bigger move coming out of lunch. I don't know if Charlie wants us to hear him, but maybe I'll mute Charlie for him. I'm gonna mute Charlie because I think he's got a hot mic. But yeah, always keep an eye on the higher time frames, right? Especially when you're getting down into trading sub 5-minute time frames, and especially if you're looking for bigger price targets. Like if you're trading a 1-minute time frame and you're looking for 40 points, you might want to make sure you're going in the same direction as that bigger hour candle or 4-hour candle. But again, if you're trading a smaller, sub 5-minute time frame and you're looking for 5 points here, 8 points here, 10 points here, you can definitely get in and get out, even if you're going opposite of the larger time frames. But just understand that, for example, when we had some bigger candles coming out earlier today that were to the downside, if you found an opportunity to go long, you were just taking little blips in the road on a bigger downwards move, right? Market profile and POC, yeah, see, like I'll look at that, but I'm not gonna, I look at it, but I don't use it to trade, right? Because like if you notice this chart that I'm looking at here, it looks like a hot mess, right? It's got a bunch of stuff all over it. Again, I've been looking at this chart for years, but like we can find, like we can find, like we've got traders in our room who use volume profile and different things of that nature. And typically, like I can find peaks and valleys on market profile or something like that, a volume profile, where it's going to align with some of this crazy shit that's already on my screen, right? So like anyone who's looking at like volume shelf profile, like do you guys have a lot of volume sitting at like 20,725, 20,720? Like, do you have a mountain there? Do you have volume there? Do you have volume sitting down between 206.75 and let's say like 206.84, right? So again, and do you have what do you have between 206.98 and let's say 207.05, right? Like I'm sure there's going to be areas there where you're going to find players. That's what I'm trying to say. It's all the way how you analyze the market. Again, you can mumbo jumbo all of this stuff all together, right? You can use, X, Y, Z, A, B, C, all these things on your chart. It doesn't mean that the more stuff you're looking at and the more ways you're trying to analyze the market is any right than wrong. I mean, because, you know, I mean, like, for example, I can throw this chart on my screen where I don't know anything that's going on, right? I have no idea what's going on at all. There was just a 20 SMA on my chart, and I could still find ways to make money. You know what I'm saying? Or I can find ways to lose money as well. But what I'm saying is, you know, if I was to just look at this bare bones chart here, well, I can see that if we're trading below this 20 SMA here, then, you know, do I want to be long or short? I probably want to be a little bit more short. When we come back into this 20 SMA, you know, do I want to be buying here at a lower high, or do I want to wait for a rejection and confirmation to go back short again, right? Or do I want to wait, you know, if I'm looking for a buy the dip opportunity, do I want to see the lows get tested, swept, and hold, right? Notice how when we swept the low of day that we put in off the open, off that first hour, we swept those lows. However, we never closed below them, right? We never closed below them where we had candles starting to build below. So we could use this as confluence here that, you know, buyers were really strong between 206.69s and 206.80s. That 20-point range, this 20-point zone here, is a perfect opportunity where it's easy to, you know, put on a cheap long, right? So again, it doesn't really matter which way you look at the chart, as long as you're looking at the chart with an idea where you know how to manage risk at the end of the day. That's it. Because even looking at this chart, I can just go and put something else on my chart. Like, let's put, I don't know, let's put, oh man, you know, like, let's put, going back to, like, if we put VWAP on my chart with the 20 SMA, and find levels there as well, right? I don't want to be going long if we're trading in the VWAP, right? I want to wait for price to test VWAP, see if it holds or rejects, and if it doesn't reject, then we can be coming back down for another leg down, right? So again, there's a lot of ways to kind of analyze the chart, and depends on, you know, on how you want to do that. Yeah, some days I do like looking at a clean chart, but I always have that big chart on another monitor. I'm always looking at the bigger picture. Someone just said 5 points on a 2 minute, so let me go back to this 2 minute chart here. So here's a 2 minute chart, right? Here's a 2 minute chart. Can you see that? I think you can see that. So here's a close below the 20 SMA on a 2 minute chart. Here's the confirmation, right? The low price was sitting at 207.02. This drops down to 206.93. Easy 5 point scalp there. Notice where we're bouncing. Notice where we're kind of bouncing into this 2 minute Bollinger Band. Again, I respect Bollinger Bands, but I don't use them as hard lines. These things move all over the place, right? I use them for areas of taking profits into. I use them for areas of potential bounces, but they're going to move around. With that being said, you can see the prior swing low for, you know, at my time, 9:04 Pacific Standard Time. This prior swing low is holding. We haven't made a new low. So now, since we've bounced off the floor, we're starting to put in higher lows. Makes sense? So again, it's all the way you want to look at the chart. But for example, if, let's say, for example, if someone was taking this 2 minute short play here because we lost support, and they had no idea where the prior swing low is because they're not zoomed all the way out that way, and they had no idea that you have a potential Bollinger Band sitting here, and you're waiting for a bigger move. And what if this bounces? Guess what? You missed your opportunity to take profits, because now the market is starting to put in higher lows and is starting to trend higher. We're not back down onto the downtrend until we break this prior swing low, and for me, that's going to be below 206.87s. Until we start closing below 206.87s, this is a buy the dip opportunity, with intentions of maybe when we do come out of lunchtime that this goes back up. It goes back up to where we were trading at. Yeah, for people who say indicators don't work, I don't know. For people who say that, oh, moving averages is a lagging indicator, of course, I've said this before, of course it's a lagging indicator. And of course we need a lagging indicator to help us with future price action, because a 20 SMA is just the mathematical equation between the last 20 bars of data that's being analyzed, and that's the average price of 20 bars. Now imagine if you had a 1 SMA, that's this 1 bar. It's 1 bar. How much data is that going to give you? You want something to be current data, then it would be a 1 SMA, and it's going to be the current bar that's printing, right? So we need prior data to give us context to see what potentially could happen in the future. You know what I'm saying? Like, I mean, geez. You know, I never really paid people too much mind that start spitting off that stuff. It's like, I've been doing this shit for way too long to like, everyone has their own opinions. I've said it before. Everyone has their own opinions on how to trade, what to trade, what's good, what's not. Look at guys, at the end of the day, if you found something in the market where you're making money, great. Because that's the only reason why we're here. That's the only reason why we're here. If it doesn't work, and you've back tested it hundreds of times, and you forward tested it hundreds of times, thousands of times, and it still doesn't work, well, then switch something up, right? Then switch something up. But everyone thinks that you can find one particular fancy indicator or one, you know, new fancy terminology word for supply and demand that's going to change the way you're trading, and it's going to, every day you're going to be able to just come in and print off of that. The market is evolving, and the market changes from quarter to quarter, from cycle to cycle, from day to day, right? Stick to have some cash in your pocket to be able to stay in the game. Stick to a strategy long enough to see if it works and what you can do to fix it and how to adjust it. And try to keep your emotions in check long enough to be able to see the other side. That's it. That's it. Find something that works for you. You know, at the end of the day, there's a lot of strategies, there's a lot of things. You know, you can look at a chart with a bunch of crap on it. You can look at a chart that's bare bones. You know, we can take everything off of our chart, right? Let's see. Let's put like a 9. Let's remove this. Have nothing but pure price action on our screen. We can draw our own supply and demand zones. So, you know, if I'm looking at this chart, I want multiple touch points here. I could take a couple of these wicks here. What's the range on this? 206.88 down to, there's a 20-point range here. I think everyone would kind of agree that every time so far today, price has kind of tagged this 20-point range, this zone, that buyers have stepped in. And until we break this demand zone, the potential move could be up. So if you're looking for the buy the dip opportunity, you want to buy somewhere in this zone, and that's a cheap long, because if it breaks through and closes, now this would then turn into resistance, aka supply, until we get back over it, right? I could also see that there's a little bit of a trouble spot here. I can see that we have a trouble spot here. And obviously, just looking at wicks, I can see we've got a trouble spot here. Okay, so these could also be zones and or targets, right? So let's say someone has been loading here, or loading here, or loading here, loading here. Well, where would you try to be targeting if your dollar cost average is somewhere down here, or you're looking to start along somewhere down here? I don't know, maybe 20,700, maybe 20,740, maybe 20,770, right? You know, this chart very well could go lower, right? It could break down. And does that mean that your technical analysis is wrong? No. All it means is that it was a failed move. That's it. take it on the chin like every other adult trader who's out there, and continue to stick with the script, right? Because if we were to break through, right, if we were to break through this demand zone, okay, put in a new low, great. Do you want to chase the new low? Probably not, because what if it's a sweep, right? What if it's a sweep and then they come back up and they take you out? What you would want to see is the low of day get taken out. You would want to see us come back into this range, so make sure you're sized appropriately to even see that move play out. And then you want to see that new low get taken out, and that's where you're going to get into this trade and print on the way down. Now, where would be some areas to take profit? I don't know. You got to go to a bigger time frame, right? A bigger time frame, and start looking at where we had troubles spots before. So notice, you know, if we go back here to yesterday, we had some resistance here, resistance here, resistance here, resistance here, resistance here, before we finally broke through. Look at where we traded down to today, right? We traded down to yesterday's initial balance high. We traded down to yesterday's initial balance high, and now we're holding, right? So below that, where would be the next potential opportunity where, you know, there was buyers and sellers, you know, having a little bit of a fight for price? What's down here in these wicks? Notice these wicks. Notice these wicks, right? Let's look at the 1 hour time frame. You could make an argument that a next potential demand zone could be down here in the 20,640 area, 20,650, right? Which is what we discussed prior when I had this big chart on the screen, because on the hourly time frame, that big chart was the 50 SMA. Okay, just a 50 SMA here. You see that? So again, instead of me doing all of this, you know, legwork, where I'm adding all this crap on my screen manually, I'll just keep my moving averages on the screen because it's going to match up anyways. Makes sense? Gotta think about it. The longer you're in this business, the easier ways you try to find to do things. You know, I don't want to get up every day and have to draw out all these support and resistances. It doesn't make any sense to me. So again, on that cheap long trade that you took, right? On that cheap long setup that you took. So basically, got out for scratch, which is fine. I like protecting your position there. You have this double bottom down here. It's actually like a triple bottom down in this area. So far the floor is still holding, right? Truthfully speaking. But again, if we don't want to risk an additional 10, 15, 20 points, it's a smart idea to get out of the trade, right? So until we lose this zone, right, I've been calling for this all morning in the community. I want to see 206 50s get tagged, 206 60s. I need that to get tagged. For me, that's a better opportunity to start that bounce, right? I'd like to see him sweep this, get all these longs out, right? Like sweep them, take their money, get them out, get them the hell out. Everyone who's trying to bounce this right now, get them the hell out, and then let's get down into, like, let's say maybe a 1 hour support, right? Because notice this 1 hour chart is extremely bearish. This level I want to see get tagged. 206.53. How do I come up with that number? Not making it up. All I'm looking at here is the 50 simple moving average on a 1 hour time frame. This 1 hour chart is extremely, right, is extremely bullish. I mean, bearish. We're still pinned underneath the 5, 10, and 20 day moving averages. Pressure still to the downside here. Again, it could snap back, of course, but whoa. The potential big's bottom here, guys. Potential little big's bottom here. Again, assuming we don't take out the lows. If we take out these lows prior to the candle, that's a no-go. Feeling they're going to sweep and then reverse. But let's see here. So there's that flush. So there's the flush through the low of day. That's a new low that just got put in there. All the way down to 206.60s. Again, what were we looking for? We're looking for the 50s, right? I want to see the 50s get tagged. I want to see those 50s get tagged. Because at this point, the way I see it is, why do I want to stop in the middle of the road? Why do I want to stop in the middle of the road? Just get me down here to this demand zone, right? Get me down here to this demand zone and test. I never really like when we sweep and then it just stops in the middle of the road. Like, at least get me to tag this, right? That, yep, Chad. Elder, we got those 650s. We've been talking about that shit all morning. 650s. So I'd like to get it just a little bit lower. Like, I'd like to sweep that, but again, I think that was probably it. That could have been it. Because look at the aggressive wick that just came in. Look at the aggressive buyers that came in. We did get that down all the way to 61, 206.61. But this could be a potential big bottom here. Be looking at. Let's see here. We can get this current candle that's trading right now to get over the previous with the long wick. I might be interested in taking a little bit of a scalp there.
I guess this is a screen that everyone wants to always fucking see all the time on YouTube, right? Everyone's always calling for it. Makes no sense. Get me into those 50s out there. Make a call. Call those boys up down there. Tell them we need this in the 50s. That's what I'm saying, dude. It's like I don't chart on this shit. All I'm doing is clicking buy market, sell market with the ATM. It's like this is gonna do me nothing. There's that tag of that 50% extension here on the 2 minute into those 50s. I like that. Where is that support at? Where is that? Where is this at here? 50s, 206.55. On the hourly chart, though, I'm looking at. So there's that 50 SMA. I've got room all the way down, truthfully, into 206.37 now with this selling pressure that's come in. 206.37. That could be a sweep spot there. We need to see 640, 630s. We're going to need to see something on a smaller time frame that shows some type of significant reversal before we can try to bounce here. But the sellers definitely stepped in serious control here. Let's see if the bulls can kind of push this back up and reclaim this 50 SMA on a 1 hour. If they can reclaim that 50 SMA on a 1 hour, could be looking at a good potential bounce here. We're going to want to see a little bit of a reversal candlestick, either some type of hammer candle, some type of indecision, something. Got us down here into the 46s, 47s. Massive sweep down here. The only thing I'm looking at here is these two demand zones. These two demand zones here. And what happens when we get into 206.38. Also came down to the initial balance, low 50% extension. That's also another indicator, I guess you could sort of use as a confluence. Let's blow this up a little bit more. Two 06.36. If bulls don't push this back over the 50 SMA, I'd be looking for 206.36, 206.38. About another 10 to 15 points down. Nice reclaim here, that 50 SMA. It's can hold that. Truthfully speaking, need to get back over the 60s to have a little bit more room. We're looking at resistance here on our overhead supply here on the 1 hour time frame at around 206.76. If they can keep this momentum going. We got Julie done for the day. Nice little profit there for her. She's still building back that account. Good job, Julie. So far, nice tag, nice sweep of those lows. Nice little hold here so far of this 50 SMA on a 1 hour time frame here from the bulls. Again, patience here. If you are short, you should have been selling into the 50 SMA when we swept. If you're getting long off of this demand zone, you're going to have to truthfully give this thing down here to 206.30s. Okay. The only reason why I say that is because this is your last level of demand until we break that and you have room down to 206.610. Which could entirely be possible right now, okay? Because again, if you look at the NASDAQ right now, the NASDAQ's only trading minus 7 points, 6 points. Essentially flat on the day, okay? It's essentially flat on the day. So plenty of room to go down, plenty of room to start a bounce here. It could exactly go either way, right? And that's the thing with trading, it can go either way. Here, so this could be the start of a big move down, or this could be the start of a nice little reversal to the upside. If you're trying to guess which side of the trade you should be on, you got to really be careful because you need to have a firm, I guess, plan intact, right? You need to have a firm plan intact here. If you're looking for the short, you should have been selling into that demand zone, If you're looking for the bounce, you need to see these demand zones hold. Now, if these demand zones get blown out, you've got to get out of the trade. You've got to get out of the trade. The 2-minute chart here so we can see exactly what's going on a smaller time frame. So again, on that smaller 2-minute time frame here, we had the sweep of those lows. We had a little bit of a big bottom here, back into the 10 SMA. Okay, back into the 10 SMA here, kind of taking out this prior swing high. Now we've got some room to push up into 206.81s, guys. 206.81s. If it wants to continue to push, we could be looking at a potential 10-15 point bounce here, holding these floors. Again, oh, I went off the screen here. I'm in the long here, up 120 on this express fund. I gotta stop step on this PA account here, up $80 here. I'm just gonna look to take a little bit here, see if we get that little push up, 125, 130, 140. Let's see if we get a little bit more out of this thing. That's gonna be good enough. That's gonna be good enough for me, guys. It's gonna be good enough for me. You know, again, we gotta slow nurse this thing here. So total on the day on this funded account with Top Step, 275 in the green, 4 trades, 8 total contracts traded on the day, average trade time 5 minutes. Again, had to hold trades a little bit longer than I would have liked to today. Okay, that's 100%. Is it a realistically on a large scale of things? Is it? We're looking also, guys. If anyone's in the long on the big bottom here, we're looking for 70s. Okay, you're looking for 70s, mid 70s, but a great opportunity to take some gains. It's a great opportunity to take some gains here. Anyways, longest trade time 11 minutes, profitable trades 100%, whatever, blah blah blah. It's not that big of a deal. Whatever, right? Average winning trades around $68. That's it. That's all we're looking to do there. Not looking to make $1 million bucks, right? Especially when you're trading prop. You're just looking to get in, make a little cash flow, call it a day. Yeah, this account's locked up today. This account's done trading today. Because we also started another eval combine with Top Step X. We're up 989 in that one. Again, you guys know how I play evaluations. We're going to go heavier side. We're going to be a little bit more aggressive. But that account, just started it today. 50,989 is the balance there. So we just need another few good days. Another few, maybe a week or two. Try to get this one passed. That'll bring my total XFA accounts with Top Step up to 4. And if we get 81s, guys, if we get 81s here, if we tag 81s, you guys all got to hit the like, right? You guys all got to hit the like, because we were looking at that supply zone of this 20 SMA to get tagged here on that Big's bottom. We got back over the 5 SMA. We went from demand or supply to supply to supply. I mean, literally, we tagged the 20 SMA, right? This 20 SMA is going to move around a little bit. And we got up to 70. What did we get up to here? 77 and a half. It is what it is. It is what it is, right, guys? So I was looking for 80s, 81s for the potential move on this little, just again, going against the trend, right? Remember that when we're going against the trend, we've got to be careful, right? What's the trend? Look at the start of the day today. Oh shit, I'm on the wrong screen. Look at the start of the day today.
right? So notice the start of the day today. We pushed in these highs and we dropped, and then we put in a lower high, and then we dropped, and we put in a lower high, and we dropped again. This is just scalping momentum on a downtrend. That's all you're doing. Mm, 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 mm. Mm, 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 mm. Did anyone else grab the bounce? Again, I didn't take the short through lows, which was a great trade. I know some of you guys out there took it. That was a great trade. The only reason why I went in on the bounce, okay, the only reason, if I go back to the 1 hour time frame, okay, this is the only reason. So on that previous hour candle, right, because we just opened a new one, on that previous hour candle, we got through the previous hour lows. We got through that Bollinger Band. Pressure's been down, obviously. I didn't take the short position. I've been calling for it all day. Me and Elder have been looking at this thing since the morning to get down there into those 50s. So yeah, the short position could have been played from the 70s into the 50s. That was a nice 25 point winner there. Which was a beautiful trade. I mean, beautiful trade. But I was really looking at the 1 hour time frame, 50 SMA, 50 EMA hold. Now again, I got into this bounce. Yeah, I got into a little bit of a drawdown, 120, $140, 100, I think it went up to like 150, I think it was down. But again, like I was trying to emphasize, have a plan. What was my plan? Well, if this thing was to break down through this 50 EMA, I want no parts of it because I really don't want to get caught in something that has potential to come down to this linear regression down here. But we swept, we held. These are your strongest moving averages, guys. If you just start listening and trusting these moving averages, they will help you, right? Even if you don't believe in moving averages. 20 SMA, 50 SMA, 200. 20, 50, 200. Trust those levels, and you can find ways to paint in between the lines, okay? You can find ways to paint in between the lines. And basically, what I was looking for was the test of the 50 SMA sweep, get in on that bounce using that 50 EMA as a hard max paint. Okay, so I'm going to play a little bit of that zone, right? A little bit of that zone, hoping for that potential bounce. Again, now I'm not saying hoping and holding this thing, down at 20,600. No, hoping that the bulls step in and get this thing ramped up, or I've got to cut the loss. See, I don't agree with people that say, well, I thought it was going to bounce here and then we're trading down at 20,600 and like, well, I'm hoping that it comes back. No, what was your level going into the trade? If the level going into the trade needed to hold, then it needed to hold. And again, as of late, especially with futures, I mean, with options, I zone trade a lot where I'll use these moving averages as confluence. But with futures, I tend to not zone trade as much where I'm using like a range. But again, on a day like today where I'm not getting a lot of opportunities for my quick scalps, I've got to take scalps where I'm going to use a little bit more of a zone, a little bit more of a range. It is what it is, but so now we came right back into the initial balance low, and we basically, came just a few points shy of testing that, and now we're pushing down a little bit. If we can get back into over the initial balance low, we've got a nice little range to play with for the bulls. If this is just another, which is like the fourth or even fifth lower high being put in, then expect just a continuation to the downside.
Look at the 5-minute time frame. 5-minute time frame bounce came right into the 20 SMA, right? So notice the, you know, that low. Once we swept everything here, we failed to continue, and then 9:55 PST candle takes out a previous candle high, clears out the 5 SMA power trend that was currently down, trades into the 10, trades into the 20. That's how I look at my charts. How I look at my charts. Supply to supply, demand to demand. If we take out this supply, maybe we trade to the next supply zone. I want to take profits into that. If we break that supply zone, maybe we trade into the next supply zone, take profits to there. If it fails to break and hold over, you've got to either cut the trade and or use a previous 5-minute candle as a stop, break even as a stop, or something like that. Anything over this 20 SMA would have room to 20,700. Truthfully speaking, there'd be no more trades for me today on any of my accounts. But I'm kind of looking at, you know, price as a whole. We're going to get into a lot of thick supply zones here, so I'd really like to see I'd like to see the bulls truthfully get over 20,725. That's going to really open things up to the top side, or just continue to move down through those. If we do, that's also in the trade. Everything right now in between is just noise. Just noise. Let's take a look at some stocks here. See what Tesla's doing. Got a little bit of a double top here. Tesla's was a nice trader today. So I caught Tesla early this morning, and I don't even want to look. I always hate looking back at my trades because if they did work out, it just generally gets me upset that I didn't hold it, but that's the name of the game, right? So today I was in at 2. Geez, I'm not even gonna go back. Okay. I had 255 calls, guys. This first 5-minute 20 SMA play out of the gates, right? Once confirmed, I got in, power trending over the 5 and 10, held this into supply, right? Into supply, which was a linear regression. That's 256.09, and then we tagged 256.5, almost 257. This is where I got out. So notice this, right? This is the entry. This is the get out. Again, not a big move, considering what the hell it did all day, right? But again, you know, once I get, like, the thing is with me, guys, and I've been this way for years, and I would recommend everyone to do it as well, especially to, you know, P&Ls. Like, if you hide your P&Ls on the screen, it definitely helps your emotions as well. But like, once I take this trade, you got to think about it. If I was in 15 contracts of 255 calls, okay, and I'm getting in, you know, after slippage and fees, or not fees, but after slippage and like by the time it's taking me to get those contracts filled, we're talking about anywhere between 255 to like, let's call it 255.20, right? Well, within a matter of 5, 10, 15, 20, 25 minutes, within a matter of 20 minutes here, we're going up almost $1.50, right? Almost $1.50. That's going to move 15 cons, right? It's going to move 15 cons. And I'm also looking at a level of resistance here. I've got to respect my technical analysis, and I've got to get out of the trade where, you know, if I'm getting in on a trade and I'm believe in technical analysis and I believe that stocks are going to trade from supply to supply and demand to demand, I've got to be getting out at supply if I'm going long, or demand if I'm going short. So once you get out of that trade, I typically don't go back and look at it. Most people will go back and they'll stare at this chart and they'll try to take it again or try to short it. And, you know, realistically, I should have left a fucking runner on. You know, I should have left the runner. We grabbed 430 profits on that, and we're like, that is what it is. We'll live with that, right? But I mean, geez, when I look at these contracts right now, they're trading upwards of $1,200 a contract. So, considering that these contracts costed me, let's just go back here and look. This is going to be ridiculous. Considering that those contracts cost me around $700, we missed out on around $500 a contract. Or more, right? Roundabout. Anyways, let's look at the video. Video's going the other way. Nvidia's got a nice little big bottom here off that 200 SMA though. Had to push off the open, came back down, came all the way back down to our lowest level of demand, minus the linear regression, swept it, no follow through into the next level of demand. Great. Now this is telling us this low of day at 128.63 could be a stop. We need to be looking for that reversal and play that back into an area of resistance. So we're talking about 129.88 into 130.64 is almost $1.50 as well. Amazon, whoops, sorry. That's a wrong message. Amazon was also the other stock that I was looking at this morning. It looked good long. It hasn't done anything. Essentially, this is one of the worst barcoding charts I've seen in a long time. So what I was looking at on this Amazon, I didn't take it. I was looking at the pre-market highs, 199.86. That did break. It did go to 245, so it almost went up about $1 there. But I was looking for it to push into 200, to push into 201. Didn't really do that. It's essentially been going sideways. The stock chart on Amazon still looks good going forward. But alongside, it's just a consolidation today. Going the other way. Microsoft could have a short-term little relief bounce here. So 459.30, probably 459 as a stop. Risking about $1 on that. Potential bounce, I'd be looking for something like 461.5. AMD was the big mover yesterday, kind of pulling back off of its highs, which is kind of be expected after a big couple day run up, right? Let me notice going back to last Friday, big run up Friday, big run up yesterday. Now we're kind of pulling back, creating a little bit of a floor here. 174, I'd like to see hold. Like to see AMD, excuse me, AMD get into like 174, maybe even as low as 173 would be a good buying opportunity for AMD. Gonna bounce that short term. Look at the NASDAQ, guys, coming all the way back down here. So all we did on that push, right? All we did on that bounce, we came down, swept that 50 SMA, we bounced, we got rejected right here at hourly supply. What's hourly supply? The 5 SMA. That's your power trend. So all we've been doing is just power trending down off this 5 SMA 1 hour for the last 1, 2, 3 hours here. If we do push and sweep these lows here of this 50 EMA, guys, I mean, NAS can still, you know, it could still realistically push down to 20,600, 20,630s. It's in that range. I'd be looking at 20,613 as that next area if we do start getting down through these 30s. Let's see if we tag 20,615, 613. So if one was short, right? If one was short NAS, you're taking profits when you lose demand into the next demand zone. Now that we don't have to hit 20,615, we don't have to hit it. You're taking profits through one demand into the next demand. Now, if you manage to hold this and it does hit the 615s, more power to you. But as stated before, with that last one, when we swept the 50 EMA into the 50 SMA into the EMA, it bounced. So now that we've swept the 50 EMA, does it bounce? And if it bounces, it can bounce all the way into 650s. But so your measured potential, right? What's your potential in this trade? Potentially, it can go down to 20,615. Now, it can also reclaim the loss of the 50 EMA and potentially trade back into 650s. So potentially have a 15-point bounce before rejection. Potentially you have a sweep into 615. So if one was short through prior hour lows below this 50 EMA, that was sitting at 206, or it was sitting at 640s, you should be up right now 15 points, bare minimum. 10 points, bare minimum. You should be thinking about taking profits with a measured potential into 615. Makes sense? Oh, oh, oh. Is anyone in any active trades right now? Also a beautiful 2-minute 20 SMA play short. I don't know if anyone grabbed that. Been nothing but a short day today. Nothing but a short day today. Had some opportunities for some quick scalp bounces, but I mean, all in all, essentially wait for the pop, short to pop, wait for the pop, short to pop, right? I would assume that a lot of traders who were going long today either chopped themselves up or lost money. It seems like that's how the day could have presented itself. Maybe I'm wrong, but I always feel that when the market's kind of grinding and trending in one direction, traders tend to try to go the other way. Just like when the market's been grinding and going higher, traders are tending to short and getting stopped. All you realistically have to do is just zoom out and look at the larger time frame chart and try to just take trades with that trend, right? Just take trades with that trend. So if it looks like it's going lower, you know, let your eyes do the work for you and just short the pop. And we got awfully close to that level we were talking about, guys. What were we talking about? The 615s, right? We're talking about those 615s. Yeah, revenge. It's just human nature, man. I mean, people do it all the time. I've done it hundreds of times. It's just, I want to show you guys how this technical analysis is not fucking ridiculous. Right? Look at this. I mean, we've been sitting here chit-chatting for about an hour. What do we talk about? If we potentially lose this demand zone, we go to this demand zone. Potentially we lose this demand zone, we go to this demand zone. Right? Make it stupid simple. Like, just make it stupid simple. It's not hard. Just paint in between the lines. Remember when you were in elementary school or kindergarten or preschool or hell, you know, a newborn baby, and they gave you a coloring book and they said, okay, stay in between the lines. If you just stay in between the lines, you have a better opportunity. If you get back over the lines, you should probably get out of trade. Right? So as soon as we broke through this 50 EMA, we traded right down to, by a tick almost. The low was 206.15. Or, yeah, 206.15.75. What do we talk about? 206.15, 206.15, 206.15. How many times do we have to say it? 206.15. It's a linear regression. Now, this is a perfect opportunity here for the longs to get in on an absolutely dirt cheap long. Why? Because you can use 206.14 as a stop. You can use 206.13 as a stop. Look at this thing. Look at the reversal off that thing. This has got potential to come back up into the 50s if it really wants to. You can't even make this stuff up sometimes, guys. You can't even make it up sometimes. Maybe we go at this on the combine. Maybe we go at this at the combine. Let's go at this on a combine account. Let's go at this on a combine. We're going to put a stop at the lows, just a tick below the lows, and we're going to sit in this SOB. Again, don't follow me, guys. Don't try to do. Oh, we're already cooking here. We're cooking here. We're cooking. Yeah, don't follow me. Do your own analysis. Make sure you guys know what the hell's going on here. But I'm just saying, this is a definition of a big bottom. So for those of you guys who wonder what the hell is he talking about, this extended move down, right? Extended move down. Yeah, everyone clicked the buy, and then they're going to be screaming, crying when they lose. Extended move down, reversal candlestick here. You see that? Green taking out red. Boom, get in. Quick, take your quick scalp. Boom, get in, take your quick scalp. What's potential? Potential would be this 206.45. 206.45 is a 10-day moving average. That's your potential. Now, again, this is a downtrending day, right? Zoom out. Look at the bigger picture, right? I don't need a rocket scientist to tell me that this move, if I was to just draw a line from the highs to the lows, if I was to just draw a line going down, again, it doesn't do any justice with all the crap on the screen, but if I was to draw a line from high to low, we can see that this is a downtrend. So we're going against the trend. Yes, everyone can agree about that. We can agree that we're going against the trend. So when you're going against the trend, you want to take quicker scalps. You want to also use like that low of day as a stop, but you want to see an extended move down, and then you want to see a confirmation of a green candle taking out a red indecision candle, and you want to sit long with potential to go into the next supply zone, to the next supply zone, to the next supply zone, and just use this as a hard stop. But again, don't be scared to take profits off the table. Like if this move's pushing higher and you're in this trade and you're up $100, you're up 200, 300, 400, take some cash off the table, right? Take some cash off the table. Because it doesn't have to go up. You know, it doesn't have to get back into the 40s. It's a potential. You know, I potentially could have played professional sports. Potentially, right? Did it happen? No. Sitting here with you guys. I potentially could make $1 million this year. Potential. Right? You potentially could be the next best trader on Wall Street. Potentially. That girl you're talking to at the bar last weekend potentially could be your girlfriend. Potentially could have went home with you, but guess what? You got no game and you got shit-faced drunk. Potential. So with that being said, trying to protect yourself, you want to potentially protect yourself by selling into this next area of supply. But you want to have a stop loss, hard stop loss here. Here. Maybe drop it a point or two below. But potentially, okay, potentially, like this trade here is up $100, $130. Potentially, does anyone see that? For all those SOBs that say I don't show my fucking trades, here it is. You want to see it? There's a fucking trade. Big's bottom, green candle takes out a red indecision candle, get in, get out. Close it out for $100. Done. This combine account, yeah, it's a combine. Ooh, it's up $1,000.71. Great, great. We're already locked out of the funded account, up 270. You're not trading it. All right, protect yourself. Want to still trade? Great. Trade a combine, trade an eval. It's still pushing higher. How many people took the bounce? How many people took the bounce? Did anyone take the bounce, or was everyone second guessing the technical analysis? Because I don't second guess technical analysis. I trust technical analysis. I trust technical analysis. Technical analysis told me that, hey, we swept the lows. What was I calling for? 615, 615, 615. It's up 30 points in 615. Why 615? Like, again, because everyone on the internet, so I hate streaming. Everyone on the internet wants justification. 615 was a linear regression. You see that? We traded from demand to demand into the linear regression. You see that? Potential bounce. So what are we looking for when you come into a demand zone or a supply zone off an extended move down? You're looking for a reversal setup. And this is the reversal setup. Look at this candle. I'm going to zoom in as closely as possible. Look at this reversal. Extended move down. I just want everyone to know that this 2-minute 20 SMA play also hit for 5 points. But look at this reversal candlestick. Again, can we highlight it? Can we highlight it? Okay, you see that reversal candlestick? Do we see this reversal candlestick? How do we know that that's a reversal candlestick? It's an indecision candle that came off of an hour. It came off of a 1 hour demand zone. Yes, we can all agree on that. We can all agree on that. That this 615 that I've been preaching about came off of a 1 hour demand zone. Okay, great. Now potentially we got a Big's bottom. You guys on YouTube who don't know what a Big's bottom is, sorry, right? Join the club. We get a green candle taking out a red indecision, getting and breaking a power trend. What's the power trend? 5 SMA. Why is it a power trend? Just don't worry about it. We break the 5 SMA power trend. Here's your indicator to get into this trade. Into this trade at 10:26 a.m. Pacific Standard Time. Get into the trade. What's your stop loss? It's got to be a hard stop loss. I always like throwing it a point or two below the wick, right? What are we risking on the trade? Around 15 points. If that's too rich for your blood, go trade the Dow. If that's too rich for your blood, go trade ES. This is the NASDAQ we're talking about over here. This is the god darn wild, wild west out here. If you guys aren't comfortable trading the NASDAQ, there's just so many people all the time that cry about, oh, the NASDAQ, it's so choppy, the ranges are so big. That's the beauty of trading the NASDAQ. If you want to trade something that moves up and down a tick two at a time, go trade the Dow. See how many other people are trading the Dow with you, right? There's nothing against the Dow. I don't have nothing against the ES either. But I still like to feel like I got a little bit of life left in these bones here. And I like to get the blood flowing a little bit. So when we get the blood flowing here, we get in on the reversal here. Our thought process here was, and I sold into this demand, but we are trading from supply to supply, supply to supply. How do we know it's supply to supply? 5, 10, 20, whatever, right? It's just moving averages. And once it broke this 10 SMA supply, guess what? There was a whole new setup or a whole new trade or a whole new leave your runner on the table here. And what's our next potential? I want someone, you don't even have to know what this stupid line is here. What's the next potential? What could be the next potential stop based on looking at this chart? I don't even have the right fucking screen up. Jesus Christ. That's why it's streaming. And it's indecision candle. There's the indecision candle. There was the entry. 5-minute SMA. I gotta read over this again. 5-minute SMA supply zone. Broke it. This was my entry. What was I looking for? Next area of supply. What was the supply? This blue line here, 10 SMA. Once we broke that and confirmed, guys, what's our next area potentially here that we could be trading up into? 650s. Right, 650s. Does it have to get there? No. Remember what I said about potential. Potentially, it can go there. This is a little bit of a pause candle here on this bounce as well, though. You look for support at 206.44. If you're long and you're trying to hold a runner, anything below 206.44 could come down to 206.38. So I would be thinking about getting out in this zone between 44 and 40s. You know, you want to protect those gains, but your potential is 206.50. Right? I hate having to break it down like that, guys. But there's a lot of people who need to hear it over and over and over. And it's just, you know, it is what it is. It's all entertainment, guys. It's all entertainment. I'm trying to just teach you what I know. And it's not even what I know is the right way. It's just how I think, right? Some people like it. Maybe some people don't. It is what it is. At the end of the day, we all got to pay our bills and put food on the table. And trading is how I put food on the table. So I'm going to do it the way that I know best. What I've been doing. Sure, people found a million other ways to enter this trade or buy down there at those lows as well. This is great. That's great. As long as everyone's making money, that's great. We got Elder up 1250 on that biggie bottom. 1250 up on that biggie bottom. Beautiful. I want to know how many of you people on YouTube that tuned in took it. Because you guys aren't familiar with the way that we trade. You guys are a little bit out of the loop. Close to demand zone, I had 206, 20,609 from yesterday's value. We got higher low plus MACD. Jesse Cruz, did you take the long? Did you take a long there? I got half of it. Perfect. Half is better than no half, right? Cruz took the trade. Great, great, great. Perfect. That's all we're doing. That's all we're doing. Trading. Trading. It'd be something, huh, if it's hit, 50, 53, 54. It'd be something if it did. As long as this holds this power trend here, again, if anyone's holding a runner, I'd get out below 48. I'd get out below 48. Be something if we hit 50s, right? 54, 56, be something. And again, here's where traders will be like, well, I thought you said it was going to hit the 20 SMA. Guys, take your profits now. Like, take your profits now then. Right? Potential, potential, potential. Because realistically speaking, nobody should be starting the long here. Like, let's be honest, right? Nobody should be starting that long here. You should be in the long from way down here in the 30s. Hell, you should be long from the 40s, low 40s. You should not be getting long here close to 50. Right? This trade's done for you already. I'm just talking to people who are holding runners. Nice if we can hit 55 for you guys. And that's another thing. That's why I want to make this very, very clear, right? There's not a lot of you guys on here, but I want to make this very, very clear. Why do I not show my trades? Why do I not, have my screen up? Because for one thing, I don't chart on those screens. I chart here. What you guys see is this is where I'm charting. This is where I'm analyzing the market. But for example, I was in on this trade long, and I showed you the damn screen, and we made money on it. Did we make a lot of money? No, I made about 150 bucks on the trade. Great. We just hit the supply too as well, guys. We just hit 54 and a half. We just hit 54 and a half. We were calling for 55s, we hit 54 and a half. It's crazy, right? But because the thing is this, I'm getting in, I'm selling here at supply. Okay, great. We have people holding runners. Great. They know what they're doing. But you're going to have other people that don't know what they're doing. They're going to see, oh my gosh, everyone's making money. Oh man, I should be in on this trade. And then what do? They just click the buy button here, right? Like they just click the buy button and now it's pulling back. And it's like, well, dude, I'm already out of the trade. Like, it's like, I don't need that. I don't know what you're doing or don't do it at all. Makes no sense. I had someone tell me one time, well, no one has to take your trades and you shouldn't feel like, that people are just copying you. But the reality is, I've been doing this for too long. I know that people want to copy trades. Don't copy trades. Do your own thing. Jesus Christ, bro. You guys couldn't hear me this whole time? Because dude, I was wondering why, Elder, I was wondering why you said, oh guys, he's in YouTube. I was like, what the hell? I was like, yeah. I mean, oh my God. Yeah, and I looked right now when I asked that question, my son was on my damn PC playing fucking video games yesterday, and he has his controller hooked up here. So I unplugged that controller And now you guys can hear me. What a joke. Yeah, because I was wondering, I'm like, you guys are talking in the chat room. I see what's going on. I'm kind of just whatever trying to shoot the shit. But then I didn't understand like why like no one was even saying anything to me. We were talking to myself. I'm over here arguing with these guys on fucking YouTube. Oh man, that's why I don't do that YouTube shit every day. These guys would drive me, they would drive me nuts, man. One guy was complaining or asking, you know, why don't you show trades? Oh, what's the point of streaming then? So you can just hear what the hell I'm doing. I don't care if you fucking trade or not. Like, you don't have to copy anything that I'm doing. Like, I would prefer not to. But he was like, oh, I'm like, here's the fucking screen, and here's the P&L. Like, there you go. Like, what is that what you want to see? Because that's not what I'm charting. It's just, I don't know. People just, they always got their 2 cents in them. Just, oh yeah. Yeah, it's like, yeah, everyone on social media is an expert. That's fine. I told the guy, I said, then why you listen, dude? Like, go, if you know how to trade, like, go do what you want to do. That's no skin off my back, man. You ain't paying my bills. You know, just learn, do what you got to do. I mean, I think it's funny, so I will troll them back because it doesn't really matter. Oh, I'm telling you, man. Some of these plays out. We were calling for those 50s since the morning, man. We'd seen it on that hourly chart, and it got down there, and then it gave a little bit of a bounce, and then it took out the lows again and went right to that linear regression and bounced. I mean, this technical analysis stuff, you know, it's there. You just got to trust it. You just got to study it and trust it. Yeah, exactly. 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 You know, when it doesn't work out, everyone always looks for the reason as to, you know, why didn't it work out. Man, if it worked out every single time and we knew, like, if like let's put it this way, if I knew, truthfully speaking, that big's bottom there was going to run from let's call it 30s into the 50s for 20 plus points, I would have full ported everything that I owned, sold the kid, you know, sold the, like, yeah, you know, mortgaged the whole house and went all in. But it'll be the time you do that is the time it doesn't work, and then you get blown up. So just, you know, just take it with a grain of salt, manage your risk, because these trades, it's not like an anomaly. It's not like this thing's you're never going to see this setup again. You know, that's the whole reason why we even coined this, you know, just a little meaner version. Exactly. That's the whole reason why we even call it the Big's bottom. I mean, I used to be sitting here shooting the shit with Bigs. I'd be looking at the market sell off. I took the short, let's say. I took the short, made a little cash on it. I'm out. So I'm waiting for another setup. And this guy's telling me, hey, man, did you grab that? I said, grab what? And he's like, well, I just got out of this trade, you know, up 500, up 400, whatever. I said, you son of a bitch. I said, you didn't say anything at all, and you just keep sitting in these things. Like, every time we bottom, you're in this. Every time we top, you're in this thing, right? And then, you know, I just started bullshit with them. Dude, this is your setup here, man, because you're the king at these setups. But yeah, I mean, it is what it is. Because you see them so often, these setups, right? This the way that it moves, you know, it happens time and time again. And when it happens, you know, more often than not, I mean. And again, perfect rejection spot here at that 20 SMA, and coming back down, right? Coming back down. Oh. Mm-hmm. Mm-hmm. Oh yeah. Yeah. Yeah, I mean, they're good, especially when like you match them up with the higher time frames, right? Because even on this 2 minute, like I seen this setup here, but the trust came from truly that hour chart and seeing what area was bouncing off on. Like when we came down to the 50 the first time, I did took that long there, and we got into that, took $100 there. Then once it flushed, and realistically, you know, what you want to see is you want to see it tag that higher time frame demand zone. And if it gives you a setup on the small time frame, you've got that confluence, you've got that extra weight from a higher time frame support to match what's going on that small time frame. That's when it works perfectly. But if you get like the big bottom or top looking setup, and it's like you're just kind of floating in outer space, like if we were just floating in the middle of two big support and resistance levels, they might work and then they might not. Like it's kind of like a toss-up, coin flip. But I love when they match up on that 1 hour time frame, which is, you know, I would recommend. Yeah. Yeah, it's like exactly. It's like sometimes I'll listen to those dudes on Top Step. Again, I mean, don't get me wrong, there's some of those guys are making fantastic gains, but sometimes they're zone trading in a zone that's like 25 points, and it's like they're starting a position when realistically you can get a little bit better of a price at least to see, or if not, it's like almost like they're anticipating too early. But again, sometimes it works out. Like it's a coin flip. Sometimes it's going to work out right now, and sometimes it just gets smoked. Like even today, they were looking for a short, and they got smoked out real quick. Like one of them broke even, and another one got smoked out real quick. And it's like you've seen that the market was holding in the morning early. It was holding early, and then it obviously went down. Yeah, yeah. Sometimes you just gotta wait a little bit longer. If it never gets there, so be it. It never gets there, but I on a combine, I took one trade early, and then I was like, on the PA account, yeah, I didn't trade anything on the funded account in the first 30, but the combines, yeah, I mean, I had out of it. It's just on those funded accounts. I can't afford to be wrong right away. I'm getting smoked out because then it's like you're trying to battle back. Like yesterday, I took a stupid trade. I probably was in a trade with you because I read your message. You took a 20 play, but you didn't wait for the confirmation. Yeah, so did I. I seen a 20 play. I'm like, oh, this one looks great. This is going to confirm. It had a, yeah, had to have been the same trade. Had to have been the same trade. I seen. I'm like, this has got so much momentum. I got into it. That thing just fucking went the other way and quickly too. And then I spent all morning getting out of that mess. But yeah, so like on especially because these two, I'm copy trading these two stupid Apex accounts, and they're eligible now. I just gotta fucking wait for the next pay period. So like the last thing I want to do is go screw that up before the pay period happens. You know? So I'll definitely just nurse these and just wait a good 30 minutes to an hour. But as far as the combines and everything, yeah, that's just open season on those. I gotta restart again on the Apex, or not Apex, the Top Step Express because I took another payout again with those guys. So now that balance is super low. I've got to nurse that one as well. Is Nate in here? Nate, you in here? Hey, buddy, did they approve? Did you ever submit any more for approval? Huh? Uh huh. Yeah. When did you sub? Okay. Uh huh. Uh-huh. Oh yeah, yeah, yeah. Balance will still stay the same and everything will still stay the same again, and you could just trade it into the next pay period and just do it all over again. Request it all over again. Yeah. So that'll be fun. Even if that worst case scenario happens. Mm-hmm. 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 Oh yeah. Oh yeah. That happens to everyone. They like again the last few days. That's why I keep throwing out there that I'm not going to trade the first 30 minutes to an hour. I mean, I've been getting chopped and screwed within the first 30 minutes to an hour. So it's not working across the board. That's just a cycle that we're in right now. Because you have those days sometimes in those trades where everything's just fucking, I mean, absolutely snapping. Like you're just hitting everything. And then it's like coming to a period where it's like, okay, here's my setup or here's what I've been doing, and then it's just like it doesn't work at all. And that's what's been happening to me, especially very early pre-market and off the open, just with how I'm looking at the markets and what I'm normally used to doing. Even on momentum trades. I mean, I'm normally pretty good at these opening plays as well. Like opening trade setups where the market's shooting out long or short. I can get in this thing, ride it for 5-10 points easy, but like even those have not worked. Like sometimes I'm getting in and it's like I'm getting top ticked. It's like what the hell's going on here? It's just a cycle. So like that, just a mental shift just needs to be made. So for me, it's I'm just not going to trade anything the first 30-45 minutes on those funded accounts at least, and then let the market slow down and let me see some more structure and then try to take my stabs at the market. But whether it's that, whether it's maybe sizing down so the emotions don't get to you as much and continue to do the same thing, it's just make one little shift. And then once you notice that it starts to get hot again, like where everything is working, then put your foot to the gas and go hard again. But until we get out of that, which I don't know, it could be tomorrow, it could be next week, it could be a couple weeks. Whenever we get out of that, you'll know. Because again, like I've said, I look at my stats every day across all my accounts. And when I look at them, the best trades are seemingly working within a minute to 2 minutes, 3 minutes max. It's just in and out. The trades where I have longer hold times, I'm going back and video replaying those. It's like it's choppy, it's going back and forth. I'm still sitting in the trade and boom, it flushes me out. It's like, okay, if I get those feelings, I've got to just not trade at all. Like, or because we never know, if we wake up tomorrow and we're going to get stopped out, if it's going to be a great day or not. But if it does happen, maybe I'm sized down to where I'm taking those hits, but it's not hurting as bad. And then if I notice, 2-3 trades, and it's kind of not really working out for me, then just stop altogether. And that's the hardest part, is stopping altogether and just kind of easing that pain a little bit, and then either trading another account or coming back altogether and trading more accounts. But it's like we all know it, right? That's why I threw that analogy out there this morning. It's like you tell the kid, don't put your fucking finger in the socket. And what's the kid do? He keeps putting his finger in the socket, right? We can see it, and we've all been around the business a long enough time now. Like we can feel when the trades are just not really working. But what do we keep doing? Keep putting our finger in the socket because we think it's gonna keep working, right? And I mean, I do it all the time too, So we just have to catch it early. It's like the faster you catch it in the day, like holy shit, this is not working the way it should, because you already know the way it should work. That's the thing. That's why I try to tell people who are still new. It's like you guys don't, like, not you guys, but like people out there who are still new, they don't really understand when things should be working or how they should be working when it's smooth. So it's like they kind of just think that every day is the same, right? But as you get a little bit more experience, you kind of realize that every day is not the same. And
you can kind of like, okay, flip that switch off when I need to flip it off. Because again, you only need a couple good days and you're making a good week. You only need a good week to make a month. I mean, shit, you can make 1 month and make a whole fucking year, right? Like, so you don't need a lot of times. Again, I'll say this until the end. The person who taught me how to trade said realistically for him, and he trades a very large size account, only realistically making money 3 months out of the year for him. Okay, for him. Everything else is kind of just treading water. Not saying that he's losing the other 9 months. He's just treading water. Make a little money, break even. Make a little money, break even. Maybe have go into a little bit of a drawdown period, break even. Goes up a little bit, great. But that equity curve is just kind of flat, flat, flat. And there's only realistically about 3 months, 4 months out of the year where you're really making money. Everything else, you got to kind of tread water, and tread water very, very lightly. And then but you know though, like again, we all know, we're all human, we all have the emotions and feelings. We know that when things are working, it's time to go. Like we got to hit it hard. Don't be timid. A lot of newer traders, when things are working, they limit themselves. They pull back, and when things aren't working, they're full steam ahead. So it's kind of completely opposite. When you should be pedal to the metal is when things are working, you're in the zone, you're in the pocket, and you're just running it up because things are working and it's happening to flow nice and easy. Not when things are not working and then you're trying to go 100 miles an hour because it's not working. You're trying to get it to work. So yeah, but I mean, again, like don't feel like, you know, like, oh man, like I don't know what I'm doing. It doesn't really feel like it's working anymore or whatever. Just size down for the time being. Start getting some more base hits coming across the board, and then you'll notice, like, okay, this is like, I mean, there's been days, like there was days a week or two ago, shit, I was taking these stupid 2-minute scalps, and it was going for like 5 for 5, 6 for 6 just off the bat. Remember that, Elder? I mean, I think we were all catching them. Yeah, like you'd have a 25-point range candle and it'd wick you in for 2 points and then go the other way 15. It's like, what the hell? But it's like, you know that, you know, when it works, it can get hot. You just really have to keep that risk management in check. So like yesterday I was really going through the numbers because I wanted to see, because right now, you know, we are getting chopped up a little bit. But there's a lot of winning trades, but there's periods where you can take one bad trade and you can screw everything up. So what I'm realistically looking at here is that on a size of trading one mini contract, which is predominantly what I've been doing, if I can keep a day's loss to, like, let's say $300, however they want to chalk that up. Yeah, so however we want to chalk that up, whether it's one trade, whether it's 2 trades, whether it's whatever, however we want to chalk that up, if you can do around $300, you can go on a string of winning 3, 4, 5, 6. In my case, it's been 7 trades in a row on one particular day. So you can get that back in one day. You can get that back on 2 days. As long as you keep it like that, you win more trades. I mean, again, I've got records now on this thing, and I want to pull it up here so I can see it. But I got record. It's going back on this eval, kind of running that kind of risk management strategy, and we've had a choppy week and we've had some price action that wasn't that smooth. But where the hell did this thing go? Anyways, it's about 3 weeks. I won't get the exact number. It's been about 3 weeks, and I think it's hitting at 80%. That was as of yesterday. Let's see this here. This will give you guys some good insight too, because again, when you feel like things are not working and it's kind of like, oh man, you have that one big blow up day. I had one big blow up day on this account in 3 weeks. Okay, don't let nobody fool you that we don't all have big blow up days. Let's get this. Let's do this month here. Again, this is only the 9th, but the gross P&L is $2,800. Okay, number of trades is 60. Okay, average trade time around 2 minutes. Okay, on these 2-minute plays here, the longest trade time was 21 minutes. The number of profitable trades is 81.67%. So we're winning 81% of the trades, taking this 5 points. And again, there's some bigs bottoms in here that I'm taking for 5 points. There's some bigs tops I'm taking for 5 points. There's also been like a couple, it's not a lot, but a couple of like pre-market or like the initial balance, the first hour of trade. If we break that, you know, we'll do that. So again, where we go here? Okay, the average losing trade here, 309. Okay, so $309 is my average losing trade. Now my average winning trade, because again, sometimes I went, again, a handful of times, 2 contracts, but the average winning trade is 150. So that I'm risking 2 to make 1, which is what we all kind of knew we were going to be doing the start of this whole adventure here. Because again, what's the odds that we can kind of do a 1-to-1? Risk 5 points to make 5 points? NASDAQ's going to fucking wick us out by the time we're getting in, right? So I'm averaging risking around $300 to potentially make 150. It's 149.47 is what it says here. The average losing trade time is also 2 minutes. My average losing time is 10 minutes 49 seconds. So my longest winning trade was 21 minutes. My longest losing trade was 10 minutes. The average win was 2 minutes and 16 seconds. The average losing time was 2 minutes and 26 seconds. So I'm typically knowing within the first 2 minutes here whether this thing's going to work or not. You know, whether this thing's going to work or not. And again, like I was kind of explaining when I was in on a trade earlier, I was in the damn trade for 10 minutes before I just manually cut myself out at $45 instead of taking the full $100. But I just didn't like the way it felt. Now, my average, the largest winning trade that I had, what's that one at? The largest winning trade that I had, again, this was on a Biggs bottom play. I remember which was what this was. The largest winning trade that I had was $720 on this account. Now, the largest losing trade that I had, I remember this trade specifically, went in too large, things snapped on me for like 15 points. Largest losing trade was $900. So there was a blow up in there. Like there was like a, you know, if I want to keep my losses around 300, there was a bigger loss in that, almost 3 times the size of that. Again, though, if you just stick through the game, the 81% win rate on this is factoring in all that stuff and allowing you to be profitable. So that's for the first 2 weeks of this month. And last month on this account, there was only a couple days of trading. There was 9 trades, 9 winning trades, $767 in the profit. So you can see here, after commissions or the slippage or whatever, I'm getting around $89 to $90 a trade, trading 1 mini, 5 points, so forth and so forth. So realistic, that's all been on the 2 minute time frame, brother. All, even the bigs bottoms, even like if we're breaking initial balance highs. So like if I have that, you know, I'm looking at that first hour of trade, I'm still looking at the 2 minute chart, but I'm waiting for it to break on a 2 minute time frame, pull back, and then confirm a new high. Yeah, but everything's been on a 2 minute time frame, and I wanted to get good data with that because again, 5 minute chart works. I love it. Still using the trade options. But for these props, and again, I'm on my 3rd payout now with Top Step doing this. And again, not taking big payouts either. I'm not out here fucking jousting that I'm taking $10,000-$15,000 a pay with Top Step. But what I'm doing is I'm getting these accounts to around $2,500, $3,000, and then I'm taking out $1,000 or $1,500. Yeah, it's a $2,500, $3,000, taking out $1,000 or $1,500. That's all I'm doing. So again, 2 minute time frame, 5 minute trades. Top Step's on the 3rd payout with that kind of mechanism. So here's also another note for everyone out there, including you guys. If Apex gets funny with us, right, where they don't like what the hell's going on, Top Step's loving it all day long, and there's not been a problem. Oh, they're loving it, and they're, yeah, good. See, so good. We want a firm like that who's gonna love, you know, that style of trade, because again, you know, they can't say shit. These guys are over here dollar cost averaging, going into drawdown, and on and on and on all day long. These guys are jumping into trades and then, you know, taking 1 point here, 2 points there sometimes. Sometimes fucking Michael, he's taking, you know, he's taking like 3 points or something, 10 ticks. It's like, what the hell? Yeah, which is good because you kind of want that competitive nature between those two companies, because one of them, if they're not
really force something, the other one's going to completely embrace it because they want the business at the end of the day. So again, yeah, like I haven't requested a payout with Apex with solely 5-point take profits and solely 2-minute time frames yet. I've done it with 5-minute time frames and looking for that 1-to-1 or 10 points. I've gotten those payouts with Apex all day long. 5-minute time frame taking 10 points or taking a 1-to-1. Those are not a problem at all. These ones here, that's why I want to really nurse them very well. I don't want to get too squirrely with the amount of contracts that I'm trading. I don't want to get squirrely with the profits, right? I don't want to go like there's been days where easily I can just load up max size, take 5 contracts here, and make $500. I don't want to do that. I want to keep everything consistent as far as profits, as far as the daily loss and all that bullshit, just to make sure that Apex is going to completely pay. Because if they do pay with that, then that means that I can also trade Apex the same way I'm trading Top Step, which I already know from getting paid with Top Step multiple times that they're all for it. So again, even for you, Nate, in a worst case scenario, you've already taken one payout with Apex. I'm assuming, in my honest opinion, you should probably have no problems. Again, long holiday weekend. Today's barely Monday. Look for Tuesday, Wednesday, some type of approval. Yeah, exactly. I'd wait till at least Friday, to be honest, of this week, and then I would even think about getting squirrely on anything. But if those go through, great. Then we got 2 firms that we can equally go after. But if not, we've got one that we can definitely do some damage with. Yeah, supposedly they're hiring people to do. Yeah. It's almost, I mean, it's again, some people have taken some really nasty big payouts with those guys. I mean, they did it to themselves. I mean, allowing that 20 account thing. I mean, Jesus, you got a guy who just takes out, gets that threshold and takes out 2,000 times 20. I mean, they're gonna get hit slapped hard, very quickly. And if you got multiple people doing that, it could have put them into a little bit of a tough situation. That maybe that's why they're trying to slow things down. I don't think by any means that they're going to have any like solvency problems where they can't pay. I think that they've tried to mitigate that by denying some people that were clearly just abusing the system entirely, which is fine, whatever, how you're not investing that much into this anyways. But again, a lot of people are still getting paid out. Like, I mean, our boy Burks here just took out 10,000 from them last week. So, and again, I know how Burks trades. Trading large size, trading small take profits. So that went through without an issue. Yeah, all in all should be good. You just got the whole thing is you just gotta really stick to the plan long enough to see it through. Like don't get discouraged one bad day or one bad week even, or one blown account even. It's like keep going through it. Keep reinvesting. Make sure you keep reinvesting profits back into this business model, and that's it. Oh yeah, 100%, 100%. Yeah, once you get a few of them rolling through, and then now you have actual house money to kind of fund your business. Because again, with any business, there's a startup fee involved, there's a startup cost involved. It doesn't matter what business it is, right? Brick and mortar to whatever, to this business. It's a business. You got to put up a little bit of your own capital. You got to put in a little bit of blood, sweat, and tears and equity into that. But then once profits start to roll in, now it just becomes a cycle, right? For, all the quote unquote big streamers out there, they're not putting up any of their own cash in this anymore. It's all recycled and rinsed profits. And even myself into these prop firms, I'm not putting up any of my own cash. Take a payout, I'll go buy a handful more of evaluations and keep those things steady flowing. You want to keep those things steady flowing in.
You want to constantly be trading evaluations because anything can happen, and you want to have more accounts on the back burner ready to go. But once you start getting those payouts, it becomes just like a cycle. You start cycling them in. Okay, these two, these three, these lots of, like Burks is working lots of 5. These accounts are ready. Great. Get the payout. Work on the next set. Get those ready. If you lose some in the process, great. You just filter in some more. You got the payout that hit. So now it becomes stress-free trading at that point in time, which is why so many people trading, even before this whole futures craze and prop firm craze started, when people were all on this option stuff and small cap stuff and meme stuff, is when you're using your own personal capital, once you run out, you're done. Typically. And a lot of these guys, they don't want to reinvest their own cash back into this business. And the people, and I use the pandemic, that COVID trading time as a good prime example, because there were so many people that came into the market that did make a lot of money, blew it. There were so many people that came into this market, made some money, and are still around. And there was people that, were still figuring themselves out during that time, but they kept investing into, their education or into learning or into their accounts, who are now finally starting to be profitable. And it's like, you gotta sit through a lot of the thick stuff to really see it through. And you can't really see it through if you're not making any money. And the fastest way truly to make money in this business is to drop the ego. For one, it's to not have any targets. Like, I spoke to someone, I don't know if it was on an email they emailed me or a YouTube comment, someone that's not in our room, but they told me they had a goal of trying to make $700 a day. And it's like, they were trading at $300 and $400 profit, and then they blew it all and lost it all. It's like, what is the fixation with the $700 a day? I don't get it. What's wrong with it? like why do we have to make that before we can stop? Makes no sense to me. And it's like, that's going to be your downfall. So come in with no expectations, have no expectations, and take what the market gives you, and just keep staying in business. Keep the lights on for as long as you can to see it through the other side. Because once those lights go out, it's very hard for a trader to kind of get back into it, because mentally they're so defeated. So I don't care if it takes someone 3 months to take $1,000 or $2,000 payout, once they really know what they're doing. Once you see it and it becomes real, and the numbers on the screen now go into your pocket, you've done it once, you can do it again. You just have to replicate the cycle. That's what I told Burks when he took that first $10,000 payout from Apex. I told him, now you have house money to play with, and you've been through the process. You know what works, you know what it's going to take, and you know how long it's going to take. I think he's working on, like, every 3 weeks, every 3 to 4 weeks, he's probably eligible, the way he's trading, to get a payout, which for him is going to be 10,000, and he's working these 5 lots. But again, which is good, because you can kind of just bank on that, and from there scale up. You can always scale up. You don't have to worry about trying to do it. Like, people, the problem is people come into this and they want to do $10,000 the first month. It's like, that's really hard to do. You went out there and bought 10 accounts on a 90% sale that cost you $15, and you want to go out there and make 10,000. It's like, what are the odds of that? Nate, you don't have any Top Step accounts?
Or you do? Okay, cool. Yeah, exactly. Mm-hmm. 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 Yep, take profit. Mm-hmm. Yep. Oh yeah, take profit's a good one. They've been around for a long time too. They're a little bit more expensive, but yeah, that's not a bad one either. I mean, yeah, at the end of the day, that's what it's all about, is just maximizing as much leverage as you can. Mhm. Yep. Mhm. Oh yeah. Yep. Mm-hmm. Oh, of course, of course. Mm-hmm. Yep. Oh yeah. Yeah, small cap's a different ballgame. I started out in the small cap world. Yeah, that's a completely different ballgame over there. But yeah, that's all mainly news driven, hype driven, press release driven. Yeah, I mean, a lot of money to be made in that. I don't know. Um, it's just, yeah. I just got tired of the constant scanning. You're always scanning. You're always scanning. What are the big gappers? What are the, what's this? What's that? Who's got a press release? Who's this? Who. But again, if that's your game, that's your game. That's where your analysis is being focused to, your attention's being focused to. But for me, out over the years, I've just gotten lazy, and I'm like, I'll just trade the mega caps where every day these things are moving in dollars, and I'll just try to find where I can take a dollar here and there. And in futures, obviously, it's been a good addition because it moves so quick, especially the Nasdaq. I mean, it doesn't take much. But yeah, as far as getting some different strategies together, I would have some strategies in line with trading futures off the higher time frame. So like this, like the way that I trade options, I mean, I would live and die by that 1 hour time frame. So again, like on that 1 hour time frame today, if you were realistically just sitting back for levels, there's not a whole lot of setups on the 1 hour time frame. But what you would be looking for is some of those bigger breakdowns with space, right? And that first bigger breakdown with space was, for me in Pacific Standard Time, that 7 a.m. candle. Once we broke down below that 20 SMA, that was showing us that price action was a little bit weaker today, right? We swept those highs, put in that all-time high at 20,771, and then we lost the 20-day moving average. Now, once we lost that 20-day moving average, there was an easy short through those lows of 20,680. And what I would be looking for here is where's our next major level of demand? And that was at 50-day moving average. So between that 680 all the way down into 650, which me and Elder were talking about earlier, there was a 30-point move there where 100% should have been taken for any larger time frame trader, because once we lost that level of demand and it got confirmed, there was no other place that it can go. As long as it was still trading underneath supply, it was an easy hold. Now it's hard to do on futures because of the volatility and the range is so much. So I'm not saying that you can get into those type of trades with one, two mini contracts, because those swings of 20, 30 points up and down is really going to slap you around unless you're on a bigger account, maybe 150 plus size account, 150K plus size account. But I would definitely love to do those trades with 3 to 4 or 5 micro contracts, right? Where you're just waiting for those bigger levels to confirm, you're getting in on it, and you're truthfully sitting on it. Because if I was analyzing this 1 hour time frame chart as a stock chart, and this was like, let's say, a Nvidia or a Tesla, well, then when we lost that first hour opening range low and we closed below that 20 period moving average, all I'm doing is waiting for that low of 20,680 to get confirmed. And as long as we do not close back over the 5-day moving average, I'm sitting short, right? I'm sitting short into the 50, and it's very easy. And then once we get to the 50, I'm going to sell either half my position or 90% of my position if this was options. So if it was 10 contracts, I'm going to sell 5, or I'm going to sell 8, and I'm going to hold 2. I'm going to hold 2 for the next area of demand, which was that linear regression at 15s. And that's exactly where it went down to. And you could have easily got out of the trade there. And that was just one trade today. All you had to do was hold it, and essentially went from 80s all the way down to 15s. And we're talking about 55, 60 plus points. So hourly time frame will also keep you out of the bullshit, out of the noise. And you can definitely get a good feel and a vibe for what's going on just looking at that hourly time frame, kind of avoiding everything else in between that hourly time frame. But yeah, definitely start incorporating that. Let's see what you can do. Yeah, of course not. Yeah. So the whole idea always, with anything, futures to from futures to stocks,
is when you're scalping, it's meant to be done on heavy size, right? It's meant to be done on heavy size because you're only looking for a small piece of the move. So you're the whole idea of making money when you're scalping is heavy size, quick take profits, right? And when you're trading these bigger zones, these bigger levels and higher time frames, again, people even trade the 4-hour time frame, trade the daily time frame. But when you're trading those higher time frames, you got to take less size because you're in these trades for longer, an hour, 2 hours, 3 hours, 4 hours. In the stocks and options world, you're holding overnight, you're doing all this other crazy stuff. So you can't really put on max size or your typical, same amount of size when you're doing it, which is what a lot of people don't understand. They think that they could just take the same amount of size on every single setup, and then when they're getting smoked out for 30-40 points and then selling and then noticing that 1 or 2 hours later they would have actually made money, well, the only reason you sold was on pure emotions because of the P&L on your screen, when technically this chart here did not do anything. So just to kind of give an example, when this confirmed, it confirmed those 680s, but it went all the way up to 724. We're talking about 45 points. So we're talking about 45 points of heat. How many people can sit through 45 points worth of heat? Probably not a lot, right? Because again, one mini contract, 45 points worth of heat, I mean, you're getting absolutely torched. But on the 1 hour time frame, you wanted to see that bounce and you wanted to see that rejection. That was the whole validation of that whole trade, was getting rejected at that hourly supply to fall back down. That's just added confluence. And then you could have actually added on that rejection, again, not with Apex, with Top Step would be perfect. Add to that position there on the rejection and then double your profits on the way down. So again, I've done that multiple times. I know Biggs has done that multiple times too, where let's say we get into an options trade and it's bouncing, especially like right now, like Necky's been trading a lot of options and he's getting in on trades, and let's say he goes down $200 or $250, he'll stop out and then the trade goes in his favor. And I've been talking to him on the side and I said, well, like, I'm really using these levels, right? This big chart, I'm using these levels because I'm okay with the heat, right? Like, we got to take the heat, especially in options. You got to take some heat there. But as long as we haven't broken any technical level, if anything, it's an ad spot, or you're going to continue to hold that with confidence, because there's no, like my mentor taught me, if there's no technical damage in the trade, why are you getting nervous? Right? Why are you getting nervous? Well, I don't want to lose X amount of dollars. Well, then you're trading size that you're not emotionally ready for. So let's trade one share and let's see how you feel. And I traded one share for a very long time, which again, to do the math, you're not making anything trading one share. But what you're able to do is actually see the moves work out in your favor and see the moves kind of go with you. Yeah, so it is what it is. Yep. So, things like that can happen. So that's why, if someone was going to be brand new to futures trading, I would tell them, straight up directly, trade one micro contract, take every setup that aligns with your strategy and do that shit for 100 trades. That's going to really teach you a lot about the business. It's going to teach you a lot about emotions, because even if you're trading one micro contract, and because I'm a naturally competitive person, I think most people who are traders are very competitive human beings as a whole. But even if you're trading one micro contract and that thing's whipping against you 25, 30 points, and technically you should still be in the trade, you're pissed off, and you're down $40. And you're pissed off. Like, you're like, what the hell's going on? But once you see the trade play out, and let's say it does kick you out and it's a $60 loss, you look back at it and you're like, great. So I got to see the trade play out for a $60 loss. No big deal. And sometimes it'll come back and you'll see it reject at that level. And it went from being down 40 to now up $40. And you mentally train yourself to be like, I see why I need to trust the levels. Because what I was experiencing and what I was feeling when I was down $40 on one micro contract, pissed off, completely came back. And if I was trading any more bigger size, I probably would have been out of this trade and would have been kicking myself in the stump for it going in my favor, and or chasing a trade later, which causes tilt and revenge and FOMO and sort of stuff. So until one can get over that feeling, you've got to trade size that mentally and emotionally you can handle, and then you gradually scale. Like I've been between 10 and 15 options contracts, and again, I'm not trading options contracts where I'm going to go out there and spend $20,000, $30,000, $40,000 a trade, but I've got a sweet spot. You know, it's between probably $3,000 and $7,000 max per options trade. But I've been at that size for over 2.5 to almost 3 years. Now my account, I can probably double that. But there's been instances where I have gone higher than my normal 10 on a day like a Monday or a Tuesday when options premiums are more expensive, and I've taken a loss, and it's $1,000 loss extremely quickly, and I'm upset. So I know that I can't do that on a day in and day out basis because I'm not ready for that yet. You know, now could I, if I go on a streak, could I definitely double or triple my account size maybe if I was trading, you know, 20, 30, 40 lots? 100%. But if I'm mentally not going to be ready to emotionally handle those losses when they come, because they're going to come, I'm going to eat myself up, and it could cause me to self-destruct a whole account that's been doing well for me for years. So I have to continue to sit here for a long time. And I didn't size into the 10 to 12 contracts is about average. I didn't even size into that until the pandemic. And the only reason I was able to size into that during there was because it didn't matter what the hell you bought. You could buy anything and wake up tomorrow and the damn thing would double. And that was able to grow my account to be able to leverage from where I was sitting at before, which was 3 to 5 contracts. And depending on how much they cost, remember back then, again, during that time, Tesla was trading at $1,800, $1,500. I mean, these things, Amazon was trading at, you know, $1,000. Like these things were expensive stocks back then, so the premiums were juiced, right? I could only afford to maybe buy 2 or 3 contracts at a time. Again, the moves were bigger, 15, 20, 30 point moves. But again, the point I'm trying to make is that if I was only mentally able to withstand trading between 3 and 5 contracts for a long time before that, that's kind of where I started. I started at 1 contract, worked into 3, and then like my max when I was feeling, you know, I was feeling froggy, I would go 5, right? Able to make some decent money during that COVID trading period, get the account size up, and I've worked into 10 to 12, or it was 10 for a long time. I'm now kind of working into 12, depending on Amazon, AMD, cheaper, but you know, but I'm still not ready to go up from there. So until I'm ready to go up from there, where I know that when I do get into drawdown, I can handle that, I've got to stay here, which is a lot of times people, they make a little cash, take that account up, even on the prop firm side of things, you make a little cash, you pass an eval, and you say, man, I was trading 3, 4, 5 lots, making $1,000 a day. If I just do this a couple days, I'm going to make money. That first losing trade, you were never ready to handle that amount of size. Everything self-destructs and you start right back at the bottom. It's all a game you got to play with yourself, a mental game to play with yourself. And you know, when I was being taught how to trade, you know, it was, you know, told to me over and over, if you worked for me, I'd fire your ass. Like that's like, I heard that numerous times. Like, if you worked for me and you were trading my capital, I'd fire your ass. Because if I told you to buy, like, because we used to trade, we used to scalp stocks and options off a daily level, and if the daily chart looked great, right? If the daily chart looked great, so I'll just use like I'll use the NQ chart as an example because I'm looking at it. If I'm looking at the NQ chart on a daily time frame and I go back to June 20th, that high that we put in there, all I'm doing is sitting and waiting for that to get confirmed. Okay, so when that gets confirmed, whatever day that happens to be, I'm looking for a break of that 620 high to get broken, and I'm looking for a confirmation of the new high to get broken on intraday chart to get in. Now, there'd be times where looking at a stock chart, and that breakout, I'd miss it or I wouldn't take it. And then I'd be looking at it 2 or 3 hours later, like on a dip, should I get in? And it was told to me, if you were working for me, you'd be fired, because if the level, the whole we sat here for 1, 2, 3, 4, 5, 6, 7, 8, 9 days, we waited for this level to get broken. This is our money-making trade that could make our month. Why the fuck didn't you take the trade? Right? It's like, why the hell didn't you take this trade if that's all we're waiting for? Well, I thought, because it broke and I thought maybe it wasn't going to work out. But we waited 9 days for this trade and you didn't take it. You're gone. You're out of here. Like, you have to look at it like that. So if you have a strategy, you have to really respect that strategy and you have to execute on that strategy. And if you're not ready to do that, then you shouldn't be trading at all. Maybe you should still be in sim or in paper or something. And I'm never really big on trading sim because there's no emotions there. There's no emotions there. Yeah. The only time I would ever recommend anyone to trade sim or demo, it's if you're learning a new platform. You're learning how to put the indicators on your screen. You're learning how to, do brackets or whatever you want to do. Mess around with it for a few hours, but let's go. Let's dive in. Like, we recently had someone that joined us, and they've been doing okay trading sim. I think it's ready, time for me to, buy an evaluation. I said 100%, 100%. We got to get in there. We got to feel those real emotions. We got to feel those real emotions quickly, because we need to see. The quicker we can feel those real emotions and see what we're doing right and how we're feeling, is the quicker we can fix those problems, because everyone's going to run into some problems sometimes. So we got to identify what those problems are. Is it the problem with the strategy? Is it the problem with the time window that we're trading? Is it a problem with our own emotions? Is it a problem with the size, natural size that we feel that we can take? What is it? Because we got to figure that out. And the sooner you can figure out what those issues are, is the sooner that we can take action to fix those problems. But if we're in sim and we're running up a sim account, 10,000, 50,000, 20,000. Oh, I've been doing great trading sim, but you've never traded anything, even a little skin in the game. Go take $25 or whatever the hell it costs for an Apex gun. A little skin in the game, you don't really know. Like, you don't really know what you need to work on. It's going to be the problem. Definitely, you want to be in evaluations. You want to be in that. Sometimes, I feel like sometimes people are hesitant to go buy more. It's like, well, this day and age, I would assume that everyone who is trading, either A, you have a little bit of a nest egg where you can invest some cash. If not, you shouldn't be trading. B, you're working a full-time job, even part-time job. You're drawing some type of income. And you can't just come into this business and think that you can invest $100 and you're going to make $10,000 because you see other people doing it. It's full-time right away. It would be sweet. Yeah, it would be sweet. It's a rich man's game. Like okay, like Elder, we made the comment. Gotta have money to play. Look at sweet Dakota over there with Top Step. I mean, the guy is going down, drawdown in his account 40-50 G's, right? But he's consistently on the leaderboard, and the guy's up like $250,000 this year. So in reality, yeah, draw down to 50,000, but he's up to 250 on the year. Those are great numbers. But he's just playing at a higher scale, right? So it's just like someone who's on like let's say a $40,000 a year salary somewhere in middle America. You're on a $40,000 a year salary, yeah, maybe going out for that steak dinner at the fancy restaurant in top-notch downtown that costs you $200 a plate is rich for you. Like, that's expensive. That's hard to do. A family of 3, family of 4, you're in for $1,000. But if you have someone who's pulling in $500,000 a year salary and they're an executive VP, what's $500 to them? So it's a level of, how much money you're playing with in this overall space is going to determine what's rich and what's not, right? It's what's rich for someone is cheap for someone else. It's like, that's like the equivalent of them going out and getting, 5 Happy Meals from McDonald's. That's the same price. That $30-40 you're spending at the fast food restaurant is someone who's, making over $1 million a year is a $500 meal. Same thing. It's the same thing with trading. If someone is making, if someone is making, if someone is trading with $1,000 account, their level of risk and exposure and emotions is completely different than someone who's trading on a $100,000 account. The pain you're feeling at $1,000 account trade that's in drawdown $100, $200 is completely different than someone who's got a $100,000 account is in drawdown $100, $200. That's what I used to tell people all the time during that COVID pandemic trading. Sometimes I'd start off the day, I'd be down $300 or $400 and end the day $800. You know, great for me. I'm not going to pat myself on the back though, because I know that there's a trader out there who's got a $2,500 account and they took that $300 loss with me and they don't have money necessarily to continue to trade. So it's different perspectives, I guess we should say. It's a different perspective when, you know, it is a rich man's game. Yeah, it's great. But what has been skewed, especially since 2020, is that you can come into this game with a little bit of money and make it out, because there are those rare occurrences and those stories where people have taken a little bit of money into a lot of money, but it's not the norm and it's not something that's going to happen. The right way to do it is just like everyone else, you know, lace up your boots, go to work every day for 9 to 5 in this trading world and slowly grind it out to build a bigger account to be able to do those bigger things. Exactly. 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 The only way you can do that is is in the beginning. So like if I use an analogy with prop and I use an analogy with trading personal capital, it's the same thing. We can go out there and we can take a few $100 investment, go get 10, 20 of these evaluation accounts. We can go out there and trade heavy size and get them all passed or whatever. But we've got to do, there's got to be some type of shift once we translate that into real cash, right? We're not trying to go out there and make $10,000 an account times 20. It'd be nice, but how about we just do 1,000 times 20? That's pretty damn decent. Same thing when I was trying to teach people on the option side of things. You can come in with a $500 account. You can get started with 1,000. You can get started with 2,000. You can get started, but you're not going to see the returns of making 4, 5, 6, 7,000. Now, sure, yes, there's those rare occurrences where you can get a hot stock and it just happens to be exploding, and you're riding this thing for a week or 2 weeks on a, you know, a 2-week out expiration or a month out expiration, and you're doubling your account on that one trade. But that's not going to be the norm, right? It's never going to be the norm. But so if you do it that way, come in with a $1,000 account, and you take $20 wins, you take $30 wins, because you got to think about it like this. If some of you guys see the gains that I post in options, they're not lavish, they're not extravagant. I'm not making, you know, thousands and thousands of dollars a day, but it's enough to compound over time, so where I can take withdrawals out of my starting balance. So I have an X amount of money that I have to start each month. At the end of the month, if that account goes into the positive, I will withdraw that amount and recycle the process. But taking a $20 gain on an options contract is beautiful. 10 contracts, it's a $200 winner. Taking a 30-cent move on an options contract is $300 on 10 contracts. That same person who's making $30 is making just as much as me making $300. I'm just increasing my size. That's the only difference. So when you come into it, so yeah, and when you come into, yeah, because I used to tell Putt all the time, and I've been looking. Putt 3Putt comes into the room, posts up some gains, and he's been doing pretty well trading options. $180 here, $250 here, $300 here, and it was the same way with Biggs. Biggs has the account size. He's got the account size to trades large, but in the beginning, he was, you know, taking a $60 win, $70 win. I'd be in the same trade with him. I wouldn't be maybe 100, 600. I said, Biggs. He's like, I'm stressed out, man, because I don't feel like I'm where I should. I said, you're exactly where you should be. You're exactly where you should be. I'm not doing anything more. I'm not holding positions anything longer than you. I'm just doubling, tripling, quadrupling the amount of contracts that I'm playing based on, for one, my experience, and two, the account size that I am actively trading. Even if you have a large account size, like I've talked to guys before, they've got a $50,000 account, right, on a personal brokerage. but they're only trading with like $1,000, right? Which is great. That's fine. $1,000 a play here, $1,000 a play here. That's fine. But you can't expect to make $1,000 on $1,000. That's 100% winner. Like I would try to take, you know, if I'm in on $1,000 trade, anything $80, $100 is a great trade for me. If that's what I'm looking at. You know, $50 trade on $1,000 investment in, you know, 5-6 minutes is a good trade for me. As long as I can keep duplicating that process, I don't care. I'll keep those $50 checks coming in. Right? I'd rather have more $50 checks for the rest of my life than to try to hit $1,000 once. Right? So that's the only difference. Now, there is a strategy, and it's not the best strategy, and it tends to happen with a lot of newer and younger people, is where if you do want to grow and you do want to have that account size to where you can take a 30-cent move on an options contract premium, where your 10, 20 contracts is going to be a $300, $600 winner, and for someone trading one contract is going to be a $30 or $40 winner. If you want to get to that place fast, you can treat it as we treat some of these prop firms, where I'm going to invest X amount of dollars for X amount of accounts and hoping of passing. You can just full size into these things, and you need to, but the thing is with that is you have to expect that, just like with prop firms, we expect, hey, we're going to blow up this account or it's going to pass an eval, right? There's no other option. This account's going to get blown in hopes of passing extremely quickly, or it's going to pass. Let's say you come in with $1,000 options contract, you can full port into these things, which risk management is going to be all screwed up. And you can look for those 40, 50 cent movers, try to take 4 or 5 contracts, a $300 winner here, $400 winner here, $250 winner here. And then you can continue that cycle, which is what a lot of people did, you know, especially in the pandemic. They'd take $5,000, put it all in, they're coming out with 2,000. Now they have 7,000, they're all in again. The only problem is we all know you're going to get to that point where you take that big loss. How do you handle that big loss, right? And I know from firsthand experience. During pandemic, I brought my younger cousin in, and I taught him how to trade options. And the kid ran, and this is no bullshit. And me and Biggs used to trade with him all the time, and a couple of the other older folks in here. But this kid ran a $5,000 account to $35,000 in 2 months. I mean, from $5,000 to $35,000 in 2 months. Got completely off the rails, quit the job, thought that he could do this for a living, and lost $15K in a month. Right? So when you think about it, it's like, yeah, that money came in super fast, because you like literally, I remember it was like literally May of 2022. It was right after we came out of that bear market and the market was starting to push up again, like May of 2022. He had the whole month of May trading every day, the first 30 minutes of the market open, and never lost a trade in 30 days. Next month came along, did the same thing. And I this is the cousin I go out with a lot, so we'll go out on the town a lot. We just brought this story up because we were laughing about it. And I literally asked him, I said, during that time, remember that summer, that summer where you're just on fire? I said, what's the most amount of contracts you had at one time, on the table at one time? He said 45 contracts of Amazon. And I'm like, I have never even traded 45 contracts yet of anything at one particular time. He's like, I'm like, well, what was the outcome? He's like, I fucking lost 7,000. He's like, I lost 7,000 in that one trade, and like, it was like less than in half an hour. And he can laugh about it now, but I mean, at the time, you get a little bit over your experience level, you know. So it's the traders who can do that. That it happens, go from 5,000 to 35,000. I'll just use his scenario, but then back off and say, okay, now that I've got this 35,000, how do I go into protection mode on it? Maybe it's not trading 40 contracts, going in $15,000, $20,000 a play. Yeah, and play the same size that got you there, right? If the same size that got you there was like around 3 to 5 contracts, then just stay in that sweet spot, because when you do take a little bit of a loss, it's easily absorbed and you can get over that, because again, you can see that you can go on a hot streak for 1, 2, 3, 4 days in a row, and you have money to kind of not just take one trade and be out. You can take one trade, and if it loses, you can find another setup, and then that trade might get back all the wins, and then you can continue to go from there. So it's all about management, which is the same mentality that I take, and I'm trying to preach with the futures trading, especially prop firms. However we get through an evaluation is our own prerogative. I'll never tell anyone how to trade. If you want to sit there and take $40 trades for 3 months, 4 months and pass and do it the right, smart way, great, more power to you. For some of us folks, we don't have the time to sit there for 3 months and not get paid, right? So let's go ahead and pass this, however. But you better bet your ass when you get into that funded account stage where you can make withdrawals on what your money that you're making, you better have the right plan and risk management intact and the right mentality, or you're going to get smoked. So again, there's a yin and yang to all of this kind of stuff, but it normally, like, that's why if you guys have ever heard the terms, like, people, traders got to pay market tuition for 2 years, 3 years, 4 years before you learn the ropes. It's not necessarily that. Like, there's people that can come into this business and pick up on things in 3 to 6 months. It's how fast can you come to the realization of what's realistic and what needs to be done to get this job done. And it's normally people need to fall flat on their face and hit rock bottom before they learn, holy shit, like, I can't do this anymore. And when I started, I was fortunate enough to get out of my existing business that I owned, sold that, so I had a little bit of a nest egg. But I'm not going to shit any of you guys. I came into this business in it was the end of 2015, middle of 2015. I came into this business, in the first 2 years I lost 55 grand. I mean, I just lost 55,000. Like, I made a bunch of money. I made 20,000, I made 30,000, and I was like, I thought my shit didn't stink and I was on top of the world. I was going to be the next fucking Jordan Belfort. And then I lost $55,000 over 2 years, and I said, oh shit, if I keep this up here, I'm gonna be fucking selling this house that I just bought, and I'm gonna be, going back to work for the man. So I had to figure something out, right? Like, the ego needed to be dropped. I had to learn risk management. I had to learn what was actually working and stuff. And it took me 2.5 years before I could do that. And even when I did start making money, it's not like I just went from losing 55 grand to just making fucking $1 million or anything like that. I started small. $50 wins, $20 wins, $70 wins, trying to understand what it actually took to grow an account and how to manage an account properly. Just over the years, just the size naturally increased because it just felt natural to increase, and your account balance increased. People rush the process like there's some imaginary finish line out there, and it just doesn't work. Just take all the time in the world that you need. But also, don't come into this with the plan of like, well, I'll just really take the next 5 years and learn the business. No, like, if that's the case, you could take the next 5 years and go work 3 jobs, and you're gonna make 10 times more money than you are trying to learn this business. We want to learn this business as fast as we can, but we want to have realistic expectations. Doesn't mean that we're going to learn the business in 3 months and make $100,000. Let's at least learn the ropes to what we need to know so we can be profitable. I don't care if it's profitable. If someone's profitable $500, that's it. They can't make any more than $500. Great. So continue with your 9 to 5, continue with whatever else you got going on in life, but just continue to add that $500 a month and continue to do that until your account grows, so that 500 turns into 700, and 700 turns into 1,000, and so forth and so forth. Which is why I like I do like the model of the prop firm thing, is because, it's easy to go out there and think that, we got all this infinite leverage, right? This infinite margin that we've got available at your fingertips by trading prop. So it's real easy to go out there and hit an $800 day and think that we can do that for 22 trading days. I mean, like $20,000 in account times 20. Oh, it's beautiful, right? But what's the problem in just going out there and just trying to make $1,000, right? Like, just how hard is it to make $1,000 in a month times 20? Now we're talking, right? Even if, and I've told this to Burks too, this mentality. I said, think about this, brother. Even if you have 20 accounts and you just take out $1,000 payout for the whole month, all you made was, whatever. You got over the threshold. Let's clear that up. You got over the threshold, but you took out $1,000 times those 20 accounts. That's 20 grand. Even if you lost all those 20 accounts that next day, and it took you 2 months to get another 20 accounts back, and on your 3rd month you took another $20,000, you're still on pace for taking 4 $20,000 payouts a year. you're still on pace for making $80,000 a year as a general contractor, which for some people, depending on where you live, could definitely self-sustain themselves. And for some people, working a 9 to 5 can definitely be a huge added income. Like I always tell everyone, keep your job as long as you can. Keep whatever income you have, keep a side hustle, keep something coming in as long as you can. And add that to your bottom line. Right? Like I preached to my cousin. I told him, I said, great, you're making $4,000, $5,000 a month, $6,000 on this great month. Great. You're making $4,500 right now as a 25, I think he was at the time, 25-year-old kid. I said, so could you imagine you're already living on your own, you're renting an apartment. I said, not only are you making $5,000 a month trading, you're making close to $5,000 a month at your normal job. I said, brother, you're now over $100,000 a year. Keep that going for a few years. Really start to stack up and get ahead of yourself. Not make $35,000 to quit your damn job. You know, like that's not going to be enough. Like that's not going to be enough to like quit your job and I mean it can, but you're going to be really strapped. You're going to really be relying on those trading gains. But all right, guys, I'm all out of here. I'm all tapped out. I'll catch you guys tomorrow. Kind of see what the market does here into the close, and we'll kind of go from there. But again, lock it up. Even if you're red today, kind of lock it up. Keep the losses small. We got another day tomorrow. If you guys are green, whether you're green $10 or you're green 10,000, protect what's yours because that's the only thing you can do. And I will catch all of you guys on the next one. Those of you guys in our room, catch you guys in Discord right now.